Good morning, Andy. Good morning, everybody. Welcome to Monday morning in the education room, where all your dreams come true. It's great to have you guys here today. Hope you had a wonderful weekend, restful, did something fun. Um, Good stuff. Good morning, Miss Jen, or good afternoon, Jen. Good morning, John. Thun. Good morning, Steve. Good to see you guys. It feels early. Feels early. Living the bachelor life this weekend. Nexgen Jen is hanging out in Austin with the kids. So I am full of chili dogs and Diet Dr. Pepper, guys. Let's get this going. Um, every morning, ladies and gentlemen, I go and I check news. Every morning, I go in and I check news. And I just want to make sure that I'm not hopping in front of some emotional freight train. I'm not going to lie to you guys. I really couldn't care less what the news is. It doesn't matter to me if it's CPI or PPI or prelim U of M or whatever, really. I am Ron for sure. What I'm really looking for is one of those red boxes or one of those orange boxes, letting me know that the impact for whatever news is being released might be high or medium, meaning that somebody might go, oh my gosh, this number is different than I expected. Let me sell, let me buy. And it creates this spike in the market very often. And it really makes the market pretty untradeable. You could be in the perfect trade, and it just goes the other direction. It goes fast. It usually slips you out. You take a bigger loss than you anticipated. So part of my trading plan, and again, I do my best not to tell you guys what to do. Can you guys hear me? Can you give me a Y if you can hear me, please? Yeah? Okay. So, just two of you? All right. Rob knows to reboot. I check news every morning, and this is one of the advantages that I give myself, is to not trade in front of that emotional response. And once again, guys, couldn't care less what it is. It doesn't matter to me. All I know is that that's a great time for me to refill coffee or toast a waffle, spread some cream cheese on a bagel, whatever your thing is, guys. But I check it every morning. It's important to me. Everything that I'm going to talk about, you guys are going to find from the Nexgen webpage. We've got a great links to make sure that new users have everything that they need to be successful. This class is very much dedicated to the new user initially. The first hour of every day, guys, is getting you a foundation, putting you in a position to where you can just understand what your indicators are telling you. Your indicators will tell you when it's time to take a trade. If you listen to your gut, there's a good chance that you are going to be misled. Joe, I cannot hear you. I can't give the microphone to the classroom. As much fun as that would be, I think it would be just a little chaotic in here. Because sometimes we get upwards of 50 people, and I'd love to hear what all you guys sound like. I think that'd be a lot of fun. Oh, okay. Oh, sorry, Joe. Sometimes people want to talk. I think that'd be awesome. Good morning, Adriana. And there are times where I'm tempted to give the microphone to somebody. Some of you guys do things so well, I want you to talk about what you're doing. Guys, from the trading guide here, Ron would get shut down instantly. There's no doubt in my mind. I have a feeling his filter doesn't work. You guys have no idea how much I have to harness my filter to be the guy with the microphone. All the good stuff comes from the trading, guys. No, I love that you do, Joe. And sometimes I put my serious face on when I don't need it. You got me on that one. You definitely got me on that one. Usually I see one of these where people hit the hand and say, "Hey, let me talk. Let me take the microphone." I'm like, I just can't. You've been married long enough to know how to shut up? I guess I'm not there yet, Ron. 26 years is not the number. Maybe it happens up in the 30s. One of the things that I say every morning is that I give you guys everything you need to be successful. That's kind of my promise to you, is that you can walk away from this classroom with all the tools necessary to be able to read the software and put yourself in a position to win more than you lose. It's a very basic approach that I take in this room, and I try to keep it as simple as possible. And in the spirit of simplicity, we really talk about one trade for nearly an hour every morning. We talk about one trade. We talk about a high probability trend trade. And guys, this is a trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that, I love this phrase, it creates confidence through the memory of success. They say that's where confidence is built, from your successes. And this is a trade that offers more successes. But the most important thing about this high probability trend trade, guys, and the reason that I focus on it so extensively and really sound like a broken record every day, is because this is the one that's going to teach you to read your indicators. This trade is going to lay the foundation that you need to be successful with the software. And I can't stress this enough. Pretty much every next-gen user that's finding a level of success right now, there's advantages that need to be realized to take a trade. And what you'll find is that 90% of your day is waiting for those advantages. It's simply reading your indicators, waiting for things to come together. And this is one of the hardest things to do because it means that you do nothing. And that little devil on your shoulder is going to tap on your ear and he's going to tell you, man, if you're not in the market, you're not making money. But the reality is, if you're not in the market when you don't have advantages, you're saving money, you're retaining money, you're not giving it away needlessly. So we're going to focus heavily on the chart reads at first. We're going to talk about a couple advantages on a couple charts and just put you guys in a position to be able to open up a workspace and take a look at it and just say, wow, this is what's going on. I either do or I don't have a trade. 90% of your day, guys. And I don't think people realize how much that is. In a 6 hours in front of the market, 36 minutes maybe will be spent trading. Maybe 36 minutes. Because we get in and we get out with precision and it's fast. And I changed this up a little bit because I wanted to show you this. And I should have put this picture in here too. I want you guys to meet Norbert. You are not in control. And it's kind of a weird thing to tell people, right? Oh my gosh, I'm buying this software and now he's telling me that I'm not in control. Guys, you will never move the market. You won't make it go up and you won't make it go down. And to be honest with you, you're never going to know what the market's going to do. So we allow the market to do it rather than try to predict it. And the big money investors, the people that move the market, are these sharks, guys. I want you to come into this feeling like a remora. You're just this guy that's going to capitalize on everything that someone else does. And that's kind of what the high probability trend trade does for you, because there's two sides that we're going to use to our advantage. And there's going to be a large crowd. And these are the people that move the market. These are your sharks. These are the guys that are going to establish trends and will create momentum and will react to key areas. And then there's a small crowd. And these guys are still 1,000 times bigger than you'll ever hope to be. And they've got the power to create ripples in the matrix, if you will. When everything on a large chart says up, these guys fight. And the cool thing is we can pinpoint exactly where they're most likely to fail. So as you begin to learn to read your indicators, as you begin to set off on your journey to be a trader, ask yourself who you're trading with, right? Am I going to go in line with all the people that are in control? Or am I going to try to be that guy that fights everything? And I can tell you that the fights rarely win. We're only going to focus on 3 rules this morning. It's going to be each rule creating an advantage. And the first 2 rules are designed to have you trading with that large crowd. And it's going to be strong trigger lines on a large chart, which means that you have the advantage of momentum. You're going to have a market that's likely to continue in the direction of the trend. There's going to be so much speed in that market, so much momentum in that market, that it will even have the potential to break key areas. And very often, and I see this all the time, guys, momentum can cover mistakes. Momentum can make aggressive trades a little less aggressive, and momentum is the one. It's number one for a reason on the rules list. This is the one I don't ever want to do without. Once you have momentum, we're going to make sure that there's nothing in the way. We call these termination conditions. They're just lines on a big chart. But when there's none present, guys, you're going to have room to your profit targets. And when you have room to your profit targets, we're going to call that the advantage of a clear path. Now, I'm going to tell you right now, once you can identify momentum and a clear path, you have everything that you need for a successful trading plan. You have everything you need to put together a plan that wins more than it loses. Momentum and a clear path. If you let that drive your trades, you'll be floored at the success that you can find. But once you sacrifice these, trades get a little less high probability. Your third rule is designed to put you into the market where the market is most likely to continue. It's designed to pinpoint that spot where that small crowd is most likely to fail, guys. Your rule number 3 will change as you change. It'll grow as you grow. Initially, rule number 3 is just the entry for the highest probability trend trade. In these 3 rules, once again, guys, 2 charts, large crowd, small crowd. That's all it is. The large chart will define the direction of the market through the background color. The large chart will define the momentum of the market using those T3 trigger lines. And the large chart will define the areas. Horizontal lines on the large chart are places where that large crowd is going to make a decision more often than not. Once you have the rules met on the large chart, when you have momentum, when the path is clear, we're going to refine the first bar on the large chart and turn it into 20 to 30 bars on a small chart. It's just an x-ray of all of the price action inside of this bar. This is going to allow you to pinpoint exactly, precisely, where that small crowd is most likely to fail. Rule number 3 is the area where the market is most likely to continue. Ellie gets so excited about rule number 3. And this becomes your entry for the highest probability trend trade. This is going to allow you to reduce your risk. This is going to make it easier for you to increase your profit potential, guys. And again, rule number 3 is nothing more than an entry rule. It's putting you in the market where the market is most likely to continue. If you're brand new with me, there is a step-by-step path to becoming a confident trader. ASAFP, guys. Post your trades in class. Show me what you're doing. Talk about what you see on your charts. And that's the most important part, guys. I'm going to ask you to post in the room all day long. But I want you to tell me what you see. And more importantly, I want you to go back to those 3 very basic concepts. I want you to define the momentum in the market, whether it's present or whether it's not. I'm going to teach you how to do that. I want you to identify the areas that may be problematic, and I want you to tell me why you entered, where you entered. Because what you're going to do is you're telling me how you're reading your charts. You're telling me what the indicators are saying to you. And sometimes there's mistakes, and sometimes there's misconceptions, and sometimes it's perfect. But if you present in the room and you cover those 3 concepts, we're going to work together to make sure that you're reading your indicators accurately. That's the goal of this classroom. We're going to talk about your entries and see if maybe there was a lower risk scenario or a higher profit scenario. Jonathan, we saw that on your chart earlier today, right? Opens the door for a great conversation. And guys, the more information you give me about the chart, right? Don't tell me, ugh, I lost, or damn, that didn't work, right? I get it. Trading is emotional, but share your chart read. Let's fix the chart reads. We're going to learn the rules for when it's okay to trade. We're going to cover those 3 rules. I'm going to break them down individually. I'm going to show you exactly what it looks like to have the rules met, and I'm also going to show you exactly what it looks like to not have the rules met. And I think that both are very important because all we're doing is searching for advantages. You're going to simulate and practice. And guys, I can't stress this enough. Get in there and screw stuff up. Mess it up. That's what simulators for. Some of you have this crazy idea, well, I can't learn if I don't have a skin in the game. It's utter crap, guys. Pilots don't go, well, I can't really learn to fly unless I'm risking the lives of 500 people, right? There's simulators there for a reason, guys. Make all the mistakes so that when it's time to perform, You've gone through it. So practice like you want to play. Practice like it's real money. We're going to simplify. We're going to cover that high probability trend trade. And we're also going to talk about what we call a medium probability trade, guys. A high probability trade means that every indicator agrees for the rules for the trade. A medium probability trade means that an issue exists. And when we define issues initially, it's either going to be the lack of momentum, if there's not a clear path, and if there's no entry area. It'll be one of the three. We're only willing to sacrifice 33% of our advantages. And what that's going to do for you is you're going to say to yourself, this isn't perfect. Let me focus on the other two advantages and let me insist that they're met wholeheartedly so that I'm not sacrificing too much going into this trade. And this is the second part of getting to where you want to be. You've got to know what looks you'll commit to. You've got to know what it looks like, and you've got to learn these patterns so that it becomes easy. And that's where the spreadsheet comes in. Track your real-time performance in a spreadsheet. So Nexgen gives you this. I give you mine every morning because I try to update mine a lot. Whoops. I just tried to put my whole folder in the room. Let me get that spreadsheet in the room for you. The first tab on the spreadsheet's nothing more than a trade journal, guys. And I'm going to tell you, it's painful to put losers in your trade journal because it's a perceived failure. Losers are one of the greatest things that you can do while you're on simulator, because what you're doing is you're learning what not to do. So when it's time to trade real money, you've got that foundation built. This allows you to put everything in, talk about your momentums, but I think the most important thing, guys, is right here. Feedback from class. Talking about what you were told about your trade, right? So once again, Jonathan, I'm not going to keep going after yours today, but yours was brilliant. It was a wonderful chart read. It had a problem. And guys, what we did is we went back to Jonathan's trade and we identified the problem, and then we talked about a solution to get to where he wants to be, to reduce risk a little bit, to create a little patience. And that's what he needs to put in his feedback section. And then the goal is not just to take those pictures and leave them, but to come back and study them. And this is so omitted from the plan from so many people. If you wake up, hey, good morning, Tom. If you wake up and you look at the trades that you took on Friday, since today is Monday, right? And you ask yourself, what worked and what didn't work? Well, you're going to start to see the things that are bringing you success, and you're also going to see some things that maybe aren't working out for you so much. And you're going to find that the things that keep you relaxed typically revolve around following your rules, and those stressful moments come from breaking your rules. And guys, you're going to know that you're breaking your rules when you're doing it, but your brain's going to tell you to ignore it. So from day one, we try to commit to really following the rules. But if you do this every morning, you're going to set yourself up for the day because you're looking for these things that are bringing you success. You're recognizing these things that are not. And the cool thing is if you're posting in the room, it'll take me 5 charts, maybe 6 if I'm having a slow week, to recognize what your thing is. Everybody has a thing. Everybody has a rule that they break, or everybody has a management challenge where they jump out too early or too late. Everybody has something. And guys, this is one of the things that I'm good at, is I will recognize the patterns in you if you show me what you're seeing on the chart, and we'll work together to fix it. And that's like my favorite part of this job, is working with you guys to help you find success. The second tab is the 101 rules. Guys, that high probability trend trade rules. I've done a lot of work on the spreadsheet for you, defining strong triggers and weak triggers, defining a clear path and a termination condition, and again with that area. Guys, all this is the most basic, broken down, bare bones rules for the high probability trend trade, and all you need to do is learn these looks so that you can piece them together for a trade. That's what this is for. I'm going to give you a sheet that teaches you how to take advantage of this. There's a section where you're going to develop your trading plan, the patterns that you see, the ones that you recognize, the ones that you feel good about. Eventually, you're going to work on management. You're going to have to. You're going to begin to recognize patterns that you weren't even looking for. You're like, oh my gosh, this is happening again. And every time it happens, I lose my ass. So you're going to start to recognize these things as well as termination conditions. And your goal should be to take a minimum of 15 to 20 pictures a day, guys. 15 to 20 annotated pictures. And make your favorite looks section look like this one that I've put together. Guys, this is client trades. These are about 400 pictures of you guys using the best of the best, right? Embracing advantages. And they're not all high probability trend trades. This is the clients taking advantage of their ability to read the charts. But if you go through and you've got it with the mental thought, I'm going to look at this chart for momentum, clear path, and an entry area, what you'll find is that you're going to see that connection between all of these. There is the high probability trend trade sequence, both long and short, as well as a very basic management plan. And then I've gone through and I've started to put in things when you can start to hold for bigger moves, when maybe you should jump ship a little sooner. There's a lot of those patterns that repeat themselves. And then a whole section's dedicated to rule number 2 not being met. And guys, this is because rule number 2 is the most broken rule out there. So post your trades, track your performance, ask a million questions, and guys, annotate your charts. If all you want to do is show off and show me a picture of a winner, guys, do me a favor, drop it in an envelope, send it to your grandma, let her put it on a refrigerator. This is a class for education, so I want to see these annotations. I want to know what you're seeing. I love seeing your winners, but I want you to tell me why, because we are in an educational setting. So we're going to talk about the rules, and we're going to start with rule number 1 because it seems like a great place to start. Guys, rule number 1 says that the large chart, the big chart, the slow chart's got to have strong triggers. Strong triggers are going to create the advantage of momentum, and it's not a difficult pattern to recognize, guys. On your large chart, triggers are small triggers, solid lines, large triggers are dashed lines. Momentum, strong triggers means that your small triggers are up and above the large triggers are wide, and they're angled in the direction of the trend. I don't know. Rob, show me a picture, brother. I don't even know what a black highlight button is. You may not be connected to data. So guys, to have strong triggers, you have to be trading with the trend. It's a fact of life. It can't be avoided. Whoops, sorry about that. Grazed my spread, or my keyboard. So if the background on your large chart is green, the market's going up. This is your strong trigger up. Separation between the small and large is wide. It's angled in the direction of the trend, and the odds are favorable for the market to continue up. When the background is red, you're in a downtrend. We're looking for rules to be met for trend trades down, which means that the small triggers are below the large triggers, that there's space between the two. The odds are favorable for the market to continue down. You're going to hear odds favorable momentum all day in this room, guys. You're going to hear OFM on charts, odds favorable momentum. When I have strong triggers up, and I want you to picture scissors open, as long as the scissors are open, guys, the momentum is there. The odds are favorable for the market to continue up. This is the same look that gives you the potential to break through those key Fibonacci areas. And this is the look that's going to cover a lot of mistakes that you guys are going to make as new users and that I made as a new user. In a downtrend, this strong trigger look, the odds are favorable to push down. It can break those key areas. It can cover those mistakes, guys. And this is the look. It's always the look. No matter what chart you're looking at, this strong trigger look means momentum is strong. It has nothing to do with the price bars. It has nothing to do with Fibonacci. It has nothing to do with divergence highs and lows. It is just the trigger lines. And the trigger lines are going to lead the way and tell you exactly what you should be doing. And when those trigger lines come back together, when the smalls work their way inside of the large, this is a weakness of the large triggers. Anything can happen up or down. You will find through spending a little time in my room that I'm a huge fan of language, guys. Odds favorable, the market's likely to continue up. Odds favorable, the market's likely to continue down. And when I get that weakness, there it is. I mean, perfect. Smalls inside of the large, look at the retracement, and look at the bounce. So you can scroll back on a large chart and learn how to identify momentum without ever taking a trade, guys. And that's kind of what I really want you to do, is to be able to recognize this look when the advantage is present, recognize the look when the advantage isn't, and absolutely insist on momentum before you begin to look for that clear path. Is everybody good with momentum? It's really the easiest lesson that you're ever going to get. When the trigger lines are separated in the direction of the trend, it's giddy up, it's go time. Once you have momentum, we're going to define a clear path. Why are we defining the clear path? Because the large crowd reacts at those key areas on the large chart, guys. This is a roadmap. This has nothing to do with entries or exits. This has nothing to do with management or termination conditions being met. All this are the lines that may stop the market, guys. When you look at your large chart and you look at the lines on it, termination conditions are Fibonacci-based indicators that may reverse the market based on a comparison of the area and the trigger lines, guys. This is which lines may do it. This is exactly what they look like. So make sure that you learn these lines. You don't have to know why they came to be or who creates them. You just have to know that if you reach a divergence high or a divergence low, support, resistance, one-to-ones, it can mess up your good time. Decisions are being made, and they may be made to push the market against your trade. So we're going to give you a simple recipe. And when I say we, it's me and the mouse in my pocket, are going to give you a recipe for understanding when these lines are most likely to hold. Every line that you reach has the potential to be a termination condition, and I think all of them will be, at least for a moment. Everything begins with price reaching the area. This is an important part, guys. If the large crowd is making decisions at the areas, well, then we need to let them reach the area to make the decision. I always say it's like ordering your cheeseburger 3 cars back in the drive-thru, right? It's just not your turn. They're not ready for you. But when price reaches resistance, whether it's a divergence high, yellow one-to-ones, red Fibonacci, the only thing that you have to do is ask yourself, where are my trigger lines? If they remain below resistance, you've reached an area that may stop the market. It may reverse the market. It may create an untradeable bounce. And write this down on a piece of paper. You will never, ever know what the reaction is going to be. They'll never send you a text or an email. There's no skywriting. But when the triggers remain below resistance, no trades into that area. Price reaches support, the decision making is set off. If the triggers remain above support, no trades into that area, guys. This is a termination condition. And this rule came to be because more often than not, remember, we're trading advantages. More often than not, these lines either stop the market or create an untradeable bounce. And I want you to see, even if they break, that's what we call an untradeable bounce. And right down to support, and that's an untradeable bounce. And we hit the yellow one-to-ones. Once again, an untradeable bounce. And guys, you're seeing divergence stop the market. You're seeing support stop the market. You're seeing yellow one-to-one stop the market over and over. So you've got to say to yourself, 60% of the time, it works every time. The advantage is gone. Does that make sense, everybody? Can you give me a why if you're good? I mean, this is an absolute clinic on termination conditions on crude oil right now. The most broken rule by new users is trading into these lines, hoping that they break. True story. They will break eventually, or we'd be caught in this like crazy range rattling all day long. So we're going to go through the life cycle of a line that's breaking. And I like to do this. I need to figure out how to turn this into the right picture. So price reaches Fibonacci support right here. The triggers remain above. Every one of you in this room says, you know what? It's too soon. Don't trade. Wait a second. Let's see what happens. And then your small triggers absolutely smash through the area with odds favorable momentum. And I'm going to pause and I'm going to say to myself, this area has the potential to break, but it's not broken yet. It's only a clear path. Let me make sure that the momentum is good. Let me make sure that I have a low risk entry. And then once the small and the large get below the area is broken. And this is where we get into that high probability scenario, guys. Once the small and large break through an area, get past the area, that area is in the rear view mirror. Support becomes resistance, resistance becomes support. And your path will remain clear until you reach the next line. And guys, this is it. This is no trade. For the brand new user, that's no trade. Remember when I said a medium probability trade will have an issue? This is your medium probability. No clear path. And then this is the one, look for an entry. Clear path, look for an entry. And every time you reach a line, ladies and gentlemen, if it's going to break, it's going to go through this process. And if it's not going to break, well then it's just going to send that market right back up. So let it either be a termination or a clear path as a brand new user, and that'll work you into understanding when you can begin to trade these potential to breaks. And I will give you a plan for that. But here's one of the deals, guys. Even though this fib is cleared, the triggers are above, and you're saying to yourself, 54.88, it's in the rearview mirror, we're good, resistance is support, price reaches another line, which means that the process has to start over, guys. Just because one area breaks doesn't mean that you're home free for the day. This is frustrating for new users sometimes, because I can't tell you how many times people say, but Mark, there's so many damn lines in the way, I can't take a trade. There's so many times when a line breaks and then there's another line right behind it, and you start getting frustrated and feeling like you're never going to make any money. But guys, if you really sit on your hands for a moment, you realize that the opportunities come, they just don't come as quick as we want. 90% of your day is going to be waiting, guys. 90% of your day is going to be spent saying to yourself, I don't have momentum yet, or the path isn't clear yet, or man, I just don't have that entry area that I need to have a pattern that wins more than it loses. And what you'll find is that your biggest winning days are typically the fewest trades, because you're not giving money away on broken rules, guys. And rule number 2 gives you the ability, Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. You know about them before you ever get to them. You can actually trade to them and just take profits at them. And rule number 2 will keep you out of consolidation and chop. And guys, rule number 2 is one of the biggest factors reminding you that 90% of your day is just taking a second and waiting. Look at the big untradeable bounce. Look at how it reacts. So you've got to scroll back and you've got to take pictures of these, and you've got to learn to trust the idea that you don't have to be in every move. That every time the market does something, it's not necessarily your money. But there's enough opportunities in between those lines to make a pretty substantial living, guys. So can you give me a Y in the room if you're with me? Large chart leads the way. Large chart is going to define your momentum. Large chart's going to define your areas. And once that large chart says that it's time to look for an entry, guys, we're going to go to the small chart, that faster chart, that refinement chart. And there is going to be one time, only one time, if I turn my attention to look for an entry and I see this, rule number 2 isn't met. My path isn't clear, guys. And that's 3 divergences in the same price range. And I believe I have enough new people in here that I want to do this picture for you. What is divergence? Guys, all divergence means is that the price went down and up. That's a pivot. That's all it is. If there's a loss of momentum at that pivot, you're going to see a cyan line, a light blue line from the low, or you're going to see a magenta line from the high. And all that means is that when price went that far, momentum maybe went this far. And that loss of momentum is the small chart telling you about change that you can't see on the large chart. So 3 divergences in the same price range may terminate the trend. This look becomes more powerful with those weak anything can happen triggers, and it becomes more powerful still if the final pivot is higher than the previous or the third pivot's lower than the previous from a high. Creates a little head and shoulders. It means that not only is momentum waning, but also price isn't even getting as low as it used to or as high as it used to, guys. This is the only time when my rules are met for the high probability trend trade that I will let the small chart keep me out of a trade. The only time the small chart will tell me rule number 2 isn't actually met. So large chart says up, large chart says momentum, large chart says clear path. Large chart tells me everything that I need to look for an entry. This is where the precision comes in, guys, and I really think this is probably one of the most outstanding things about the software. Is rule number 3 is designed to put you in the market where the market is most likely to continue. Rule number 3 is designed to put you in at that failure point where the small crowd fights. And rule number 3 says that you're going to use a limit order to buy or sell a pullback at an area inside of triggers. And guys, this is the very basic areas inside of triggers. There's 3 areas where trades originate on the small chart: fibs, mid bands, and yellow 1-to-1s. The key is we want them to be inside of triggers. But for you guys, I'm going to give you the super secret handshake. Your highest advantage comes from what we call favorable large triggers. Favorable large triggers embraces the phenomenon that price is continuously returning to large triggers. Whether it's a small chart or a large chart or a range chart or a month chart or a year chart, price always seems to come back to those large triggers at some point. It's a correction. So your small chart, your entry chart, your fast chart, guys, it's going to have 2 sets of large triggers on it. It's going to have the smooth large triggers, and these are native to the 5-1. These are the ones that you'll use to establish momentum. And then there is the synthetic triggers, and these are nothing more than the large triggers from your large chart. The large and the synthetic are where I expect price bars to return to. The areas inside of those triggers are where I expect the bounce. So when your large and synthetic are overlapping, one on top of the other, 2 snakes riding piggyback, guys, this is the best of the best because there's the least amount of space to shoehorn those areas in there. And you're going to hear me say it all the time. We're going to buy or sell a pullback at an area inside of favorable large triggers. And as you grow with the software, you'll begin to recognize that when these begin to split a little bit, you still may find opportunities. But when these triggers split, guys, your risk increases and your accuracy decreases. So keep it focused in the beginning. Remember, all we're doing is learning entries. So I've made this picture. The small chart price may return back to these large triggers. And I have 1-to-1s in a Fibonacci area inside, and they may produce a bounce. But the large chart may return back to these triggers. And I have a mid band in there that may produce a bounce, which means that the point where the market is most likely to continue extends from these yellow 1-to-1s all the way down to that mid band, guys. And this red box is where the small crowd is most likely to fail, where it's most likely to bounce to continue with the trend. This is what we're defining right now. When the large chart has momentum, when the large chart has a clear path, everything says up and it says up strong, guys, you're going to wait for the small chart to give you a reversal bar. You're going to wait for the small crowd to fight. The reversal bar isn't your entry, but rather it signals the beginning of that pullback, that small retracement in price counter to the underlying trend. Once you get this reversal bar, you're going to identify your trigger lines. Where are they? Are they one on top of the other? Are they strong in the direction of the trend? Because the trigger lines, large and synthetic, are where I expect these price bars to return to. But I don't expect price to bounce off of a trigger, so I'm going to identify the areas inside. And notice that inside is all caps. From the highest point of support, which happens to be a midband, to the lowest point of support, which are those yellow 1-to-1s, this blue box represents the point where that small crowd is most likely to fail, where the market is most likely to bounce and continue with the direction of the trend. And guys, this blue box is your window of opportunity, as I like to call it. You're going to activate right at the top of that window, a tick or two above the highest point of support, closest to the pullback, That's going to be your limit order. This becomes your entry for the highest probability trend trade, because I want you to remember the large crowd, the large chart has odds favorable momentum to the upside, and there's nothing in the way to, to produce a bounce. I don't necessarily expect the small crowd to push all the way down here, but I know that they can, which means that I'm going to get in at the top. I'm going to try not to trip over a couple pennies to save a few dollars. And then guys, any line on the wrong side of the triggers, we expect price to correct to the triggers. We don't expect price in a winning trade to get beyond those triggers. So you're going to teach yourself, ignore these lines beyond. They're not a part of the window. We don't want the market down here. Our advantage has gone out the window if it does. So for a short trade, everything says down on the large chart. The momentum is strong on the large chart. The path is clear on the large chart. Small chart produces a reversal bar. The reversal bar says let's look for those favorable large triggers, and then more specifically, let's look for the areas inside. Guys, this is one of those magical moments where there is one line inside of favorable large triggers, and this one line is where we expect the market to bounce. Your limit order goes a couple ticks below it, and all you're doing is defining where the market is most likely to continue. We've just spent 38 minutes talking about how to pinpoint an entry. Any line on the wrong side of the triggers. Does everyone understand the phrase when I say the wrong side of the triggers? Beyond the trigger lines. We don't expect the market to bounce from here, guys. This is where the market should not go if this is going to be a winner. So we're going to define entries, areas inside of favorable large triggers. And once you can do that, and I'm going to tell you, if you keep it focused, most of you are going to be good at this within a week. If you stop looking for all the trades and you look for this one trade, you'll be able to pinpoint it. You may not be able to catch it live as quickly as you like to, but you'll understand the pattern and where to enter. And once you can identify where the market is most likely to continue, guys, you can figure out where it shouldn't go. It shouldn't go beyond those trigger lines. So your initial stop is where the market should not go. And you're going to hear that phrase a lot. Put your stops where the market shouldn't go. Typically, it's 4 to 5 ticks above the trigger lines. And if the small crowd has it in them to blow through the mid band, to blow through the fib, the yellow 1-to-1s, and get to the wrong side of those triggers, we're going to exit the trade. Our advantage is gone. We no longer want to be in that trade. The same is true here. If they can go through the areas inside of triggers, guys, we don't want to be in it. We don't have to put a stop $500 in the distance and just hope that that market turns. Once it blows through 4 or 5 ticks, we don't know where it's going to stop. So we exit the trade. And you have to remind yourself that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Losers are a normal part of a positive equity curve. So we're just going to take a little time and we're going to study and we're going to figure this out, guys. How do I learn to recognize this so that I can trade it live? Well, the easiest way. When your rules are met, circle a tail on the large chart. When you have momentum and a clear path, you're going to see these tails. Remember, one bar. This tail is this entire pullback. We're not trading a tail, we're trading an area inside of favorable large triggers. And if the market goes down and bounces up from these areas inside of favorable large triggers, it looks like this tail. Circle it. Make sure they line up. That's your trade, guys, and that's how you're going to study. And I'm going to give you that picture. I'm actually going to give you my whole PowerPoint. But I want you to see, let's go to the S&P real quick, because I know that there was one in here. So I'm going to open up my large and my small chart. And you know what? Let's do it this way. You guys want to do an entry together? Let's do it. All right. And we're going to start right here, guys. 8:13 in the a.m. The most important thing is that we have odds favorable momentum. So I'm going to ask everybody in the room. I know a lot of you don't want to participate because, oh my gosh, what if the answer is wrong? Guys, the greatest thing that you can do for yourself is give me a wrong answer, because it means that you and I need to work together on the concept, and I will get you to where you want to be with it. I have odds favorable momentum to the downside. My small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. The space between the two lets me know that this is a market that's likely to continue down. Does everybody see it? And notice we're on the first bar. We're only looking at one bar. So once I have momentum, I say to myself, is my path clear? And guys, this is how I go through the process every time I look for a trade. Are my small and large triggers below the fib? Absolutely. Have I reached the next area? I have not. So price will be trading right here around 49. Does everybody see that I have a clear path? My triggers are below the previous area and I haven't reached the next area. Guys, I've got room to targets and the target may be way down there. This is your large chart look. This is the best of the best. And guys, we're recognizing this without any fear of being in a trade, right? All we're doing is we're saying, hey, look, that's our look. Let me make sure I can find this when it's time to find a trade. This is what your small chart's going to look like, guys. It's going to be screaming down. And you're going to say to yourself, man, they're going to go without me. I'm never going to get paid. This sucks. How am I ever going to make money? And it goes down even more. And you're like, oh, man. Woe is me. And it keeps going. And you're like, son of a bah. And then you get that magical reversal bar, guys. That bar that says to you, hey, guess what? The small crowd is fighting. Is everybody with me so far? This isn't my entry. This is the point where I have to do this. From the lowest point of the triggers to the highest point of the triggers, guys. This is where I expect price to return to. This isn't my entry for the highest probability trend trade either. This is just where, you know what, those price bars have a really good shot of pulling back inside of this box. But that's not good enough for me. I don't want a 5-point range. So let me identify the areas within those triggers. Fibs, mid-bands, yellow 1-to-1s. And I'm going to go from the lowest point of resistance, which happens to be a mid-band inside of those triggers, to the highest point of resistance, which happens to be a mid-band inside of those triggers. That's about as easy as it gets. And then my job, oh, it's not going to let me, the market's in the wrong spot. My job is to activate a limit order, couple ticks below that mid-band, and see if the small crowd can get me. Is everybody with me so far? It's not too hard when the market's not moving. This reversal bar was at 8:15. And then it starts pushing up, and now we're at 8:17. That's 2 minutes in. And it keeps coming. Boom. One tick below, and this is why we go 2 ticks. Guys, your entry was at 53.25. And down it goes. And I want you to see the coolest thing ever and why this is your study tool. If I put that box right at that entry at the area inside of favorable large triggers, there's my tail on the large chart. Guys, this is your study tool. Go back and find this look. There's momentum in a clear path. Let's circle a tail. I don't know if that worked or not. We're going to find out. At 6:01. Right back to support in a mid-band, but it's a little bit on the wrong side of those triggers, guys. For you sticklers, brand new, this isn't an entry. That one is, though. Right at support, right inside of those favorable large triggers. And you just scroll back and keep doing it, right? Whoops. Stop it. There's another one. Does everybody see how that one looks like the rules are met? Odds favorable, clear path, didn't reach the area. Are you guys with me? Pulls right back to the mid-band, right at the base of the triggers. I'll be darned. But 3 divergences might have kept you out. So this is just a study tool, guys. Nothing more than a study tool. This is your first bar. Do we have odds favorable momentum? Can you give me a Y or an N? Now the market's moving. It's a live market. Do you guys see the momentum? It's the same look. Cool. So then I have to ask myself, do I have a clear path? What do I do? Did price reach an area? Shoot, it did. Are my triggers above it? Dag nabbit, they are. I don't have a clear path. And guys, look at the bounce happening right now. Kind of crazy, right? We knew about that line. We knew that it could be problematic. And sure enough, it is. And that's what you're going to do. And then you just have to say to yourself, damn it, no trade. Now I have to be patient. This is part of my 90%. And guys, that's the high probability trend trade. Someone said the other day, they were like, well, Mark, you make it look easy. When you look at our charts, you make it seem so easy. Guys, I want to remind you that when I look at your charts aren't moving. I have zero fear. There's no anxiety. There's no pressure to win. All I'm doing is reading indicators, and this is the easiest way to get to where you want to be. Taking trades is not the path to being able to read your indicators, guys. Going back and recognizing these looks. This is how you're going to slow down the market. This is how you're going to get to where you want to be. So this is called Chart Reading 101. All this does is it tells you, hey, Wayne, hey, Jack of all trades. Good to see you in here, man. Jen, Steve, Gary, Hamid, Andy, David. Go take 25 pictures of strong triggers. Make sure that you never have a question in your mind on what it means to have that advantage of momentum. But here's the deal. I want you to go take 25 pictures of when you don't have that advantage. Because when you look at your chart, I want you to know in the blink of an eye, without question, whether or not that first advantage is present. So you can't just take the picture. You've got to talk about why. You've got to create a connection between your brain and the look, between the words of the rule and the look. So when you talk about strong trigger lines, I'll click one from the 101 section. I have strong triggers. The small area above the large, it should be small r above the large, typo. All triggers are up. The space lets me know that they are strong. I have the advantage of momentum, rule number 1 met. And guys, I promise you, if you do this 25 times, you're never going to confuse strength with weakness. What is weakness? Small's inside of the large. Small's inside of the large. This is weak. It means anything can happen. My advantage of momentum is gone. Does that make sense, guys? You're going to have to work a little bit to get good at this. So take those pictures, spread them out, 5 a day. Easy peasy. Never had anybody go through this and tell me, wow, Mark, learning to read my indicators was a colossal waste of my time. Most people became more confident traders because all you're doing is taking strength, clear path, and an entry and turning it into a trade. As you do it, here's the high probability trend trade checklist. Guys, the same rules that we just talked about and what it means to have them met. And you're going to see this on the checklist. Is the market coming from a strong top or bottom? Was there a termination condition that none of the triggers broke through that reversed the market? Guys, a strong top or bottom is the precursor to the highest probability trend trade that you can take. But you can take it without one. Just manage it if those divergences become true. So this is kind of like your little bonus warm fuzzy on the high probability trend trade. But rule number 1 is always momentum, and this is what it looks like to have it. And this is what it looks like when it's gone. And rule number 2 will always be a clear path. And this is what it looks like when you don't have one. And this is what it looks like when you do. So as you go and take these pictures, guys, you literally have a way to make sure you're taking the correct pictures and annotating. And then there's that potential to break. And finally, the window of opportunity, both sides. And then this is for you to print out and put on your desktop. This is the actual checklist. This is you policing yourself every time you get into a trade. This checklist pays enormous dividends if you go back and replay the day on Market Replay, because you can literally pause the market before you take a trade and make sure that your rules are met before you enter. And guys, Market Replay becomes one of the most valuable tools because it allows you to see the potential of following your plan. It allows you to see what you can do in a market if you actually follow rules. And I think that it's one of the most valuable tools that you have because it also increases your repetitions, guys. Every time you replay a day, you've doubled the knowledge base for the day. So make sure that you're using this, and then I would encourage you guys, make these be the rules that you write on your chart every time you take a trade and annotate it, and you'll be absolutely floored at how quickly you get to where you want to be. And then I'm going to give you a plan, guys, the KISS plan, the Keep It Simple Stupid plan. I'm just going to go ahead and fight HR on this one and use the word stupid. Guys, this is the easiest way. The high probability trend trade, as it's taught, is not your only trade, but rather it is your first trade. It's your foundation trade. It's the trade that has been proven through back testing, through you guys taking it to win more than it loses. This is a trade that creates confidence because winners create confidence. And this is the trade that teaches you to read your charts and puts you in a position to where you can talk to yourself out loud, scaring your pets about whether or not the advantages are present to take the trade. This KISS plan is designed to optimize your chances of success with the high probability trend trade. I know, right? You're good, Rob. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that is AI-generated, fancy pants way of saying once you can read your indicators, you'll be absolutely floored at the opportunities that you see. But until you're good at it, let's focus on the best of the best, right? And this is it. It's underlined. Class feedback. This is what's going to get you where you want to be. People that hide trades from me struggle. I'm just going to tell you right now. People that don't annotate their charts struggle. They make the same mistakes over and over and over. What I'm trying to do is get each and every person in this room to not make the same stupid mistakes that I made when I was new with the software. Annotate your charts, present them. We're going to get to where we want to be sooner than later. So define your entry. Define your entry, because great entries create manageable trades. And then once you can enter, you have to manage it. And your management plan on the KISS plan is just as basic and pragmatic and if-then as it is as the entry is. So your initial stop is where the market shouldn't go, right? And then you're not going to do anything. Your first stop movement will be 2 ticks above or below a bar in the direction of your trade. And guys, this is set up to have $100 and $200 profit goals because that's the easiest way to build confidence, to get to where you want to be. Letting your management be very basic because, guys, there's a lot of emotion. Once you're in that trade, that's when the pucker factor hits. So your first stop placement is behind the reversal bar because it's doing everything that you wanted it to do. Your first target's at $100 because the goal is to get paid, guys. And as a brand new user, the quicker you get paid, the happier life becomes. And then you're going to go break even because you're training yourself to not arbitrarily jump out of the market. And when you have absolutely zero risk on a trade, it's easier to hold for the second target. The second target's only $200 away from your entry. And guys, if you enter where the market is most likely to continue and you exit at $200 on your second contract, that's a $300 winner. And guys, $300, I want you to see something. It doesn't feel like a lot of money. Is there anyone other than me that says, you know, $300 just, it's not that much, Mark. How can I be a rock star if I'm only making $300 a pop? Guys, $300 a day is 75 grand in your account at the end of the year. That's it. $150 per contract is 75 grand. And I meet people every day that are like, oh, Mark, it's not even worth my time if I don't make $1,000 a day. It's just, why the hell am I even here? And the funny thing is these are the same people that tell me, hell yeah, I can make $400 a day easy. I can make 6 figures a day easy, but instead they just keep blowing out their damn accounts chasing 1,000. Guys, teach yourself to get paid consistently. The numbers will grow as you grow. Keep it realistic. Focus on getting paid in the beginning. And then one more thing, and I'm going to give you all this stuff in the room, guys. There's 2 things you have to know before you go live, before you entertain the idea of a prop firm. $300 a day, 5 seconds, right, Jay? What a great work week. The 25-second work week. But it's true. And a lot of people don't believe that it's doable, but it is if you have a plan. You've got to know why you're going to get into the market. You've got to know why you're going to enter a trade, guys. And you have to know why you're going to exit. And that's where most new users falter, is they'll take the perfect entry and then let emotion drive their management plan. And we've all done it. And if you say that you haven't, you're probably fibbing. Commit to having the rules met. I talk about rules every day. I'm so hell-bent on making sure that you guys are committed to following rules, because your rules have been proven to win more than they lose. And if they haven't, they shouldn't be in your rules, right? If you take a trade and you're like, oh, this one wins 20% of the time, why the hell are you taking that trade? 80% of the time, you're going to give up your money. And the more consistent in action you can become, the more consistent in profits, let's change that, you'll likely become. And it's your process that yields results, guys. It's your process that gets you where you want to be. The rules help remove the emotion associated with trading. So when I go back to that person that said, dude, it's so easy for you to read our charts, to tell us what we did and what we didn't do, guys. It's because there's no pressure. I don't have any fear of loss. All I'm doing is I'm looking at a still photo of momentum and of that potential to break and that perfect entry, and I can take as long as I need to make sure that it's right. But if you go through and you keep it very, very simple and very focused, guys, you'll be reading your charts. You'll be anticipating these entries. You'll know exactly what it takes to get you in and get you out. And if you're in a high probability trend trade as a brand new user, until you can read your indicators quick enough, you have the perfect plan. Follow it. Learn to follow it, because you're training yourself to follow rules. And the KISS plan, all this stuff was just given to you, guys. You've got the daily goals. You've got the exit conditions, the high probability trend trade checklists. You've got the KISS plan. You've got a PDF version of the exact same PowerPoint that I used to teach, and you've got that chart reading 1-to-1. And again, the only thing that I have not put in your hands is repetition, guys. So every day you're trading, and then every evening, market replay, retrade the day, guys. Fix your mistakes. Take the trades you skip the trades you shouldn't have taken. Pause it and check your plan and make sure that you're following the rules. And then repeat this process until you're taking the correct trades. And if you're taking the correct trades, you should be guaranteeing yourself that you win more than you lose. That's when it's time to go live, guys. That's when it's time to put up or shut up, to test your plan, to put that pressure on you. And here's the deal. If you go live and it doesn't work out, and that's okay, it usually doesn't for most people, you find out how much emotion you have in your little finger when this happens. Then you go back to sim and you work through it. You work through that management. You work through those entries. You post those pictures. You ask for help. So, guys, that's my first hour. Every day. That's my first hour. Right off of support, right? Man, it's crazy how often that happens. Right off of support again. Rule number 2, ladies and gentlemen. All right, are there any questions about the high probability trend trade? Are there any questions about momentum? Can I help you on termination conditions? Do we need to do another entry for the high probability trend trade? Guys, the first hour is a lecture. The first hour is me flapping my gums till I'm blue in the face. And I want to give you this. This is why I teach the way I do, guys. The class is designed to teach 3 rules on 2 charts, to give you the skill set to recognize advantages and turn them into trades. And once you can recognize momentum, once you can get that clear path, guys, you have enough to create a trading plan that's consistent and profitable. And then you will find your best entry. But until you do, the high probability trend trade gives you that trade. This is your first trade. This is your foundation trade. So as you're learning, stick to it. And the first hour class is that lecture, right? You guys getting sick of my voice. He says this every day, but guys, I say it every day because eventually it sticks and you learn to believe it. And then the next 2 hours of class, guys, it's devoted to your questions, your pictures. Anything that you don't have clarity on, you need to let me know so that we can find it. Your participation will foster learning, guys. I'm not going to beg you to participate. I'm not going to beg you to post pictures. I'm not going to beg you to annotate your charts, right? You've got to want this more than I want it for you. And it's important that you present your pictures with your chart read. What do you see? If it needs adjusting, we do it in the moment, and every chart presents an opportunity for growth. So now the pressure's on you. If you really want to get to where you want to be, if you want to be a chart reader, if you want to be a day trader, this is where you flood my room with pictures and questions, guys. And when I come back from this little break I'm about to take, we're going to look at every chart that you guys post. And each chart that you guys post, I'm going to go back to it with only 3 things in mind. I'm going to talk about your momentum. You're going to tell me about your momentum. We're going to identify the clear path and whether it was not, or only had potential. And we're going to talk about your entry, guys. And we're going to work together to help you get to where it is that you told us you wanted to be. I'll see you in 5 minutes. Talk amongst yourselves. Post them if you got them, guys. A quick one. Jay, if we're watching the market and something sets up, and Pete said it, we're out of pictures, we're watching the live market, and the rules are met, why not, right? We'll do some. We'll do it on simulator. But the thing is, Jay, and I tell this to everybody because you're not the first person to ask, hey, Mark, if you took a trade live, I could be the best trader ever. Do you play golf, Jay? I love this analogy because this is what my brother said to me. I can watch Scotty Scheffler shoot a 64 all day long. I could watch it on repeat. I could watch it in slow motion. But it's not gonna get me to shoot a 64. Watching somebody else do what I want to do isn't as advantageous as studying the mechanics to get me to where I want to be. So I'm very willing to. To put live trades on when the rules are met. But in an activity where 90% of my day is spent doing nothing, I don't know that it's gonna time out. So What's that? Can only have use of one arm. You used to. Um, what happens is it may not set up. And if I'm like, hey, let's look for a trade, we might just sit in here in an awkward silence for an hour. So we try to rely on pictures and going through, but the answer is always absolutely. You know what, Jay? I played golf with a guy in Sacramento. We were driving up to Oregon, my wife and I stopped off in Sacramento and played 18 holes with a buddy of mine. And the gentleman that we were playing with had one arm. And he absolutely whipped my ass. Because his mechanics were flawless with that one arm. And he hit it straight and he hit it far every time. It was crazy. And it was a little embarrassing just how much. He was so much better than me. I don't know how he did it. I've tried to do it, and I imagine that there's a lot of practice that goes into it. There's a lot of small swings turning into big swings, but it was pretty cool. I was floored. He had one arm and just was amazing. I think he shot about a 75 that day, playing from the whites. It was pretty cool. Guys, let's get going on your pictures. I love the conversations in here, guys. And one of my favorite things about this room is that it's a laid-back room. It doesn't have to be stuffy or formal or anything like that. And one thing I did, I'm not going to click on all the pictures. If you guys scroll up to the weekend, I did a whole little section on ticks and how to calculate and what they mean in your ATM strategy if you guys want to look at it. All right. Seeing two divergence, strong bottom, twice on the divergence and 1-to-1 on the large. Odds favorable, path not clear, put stop under the 1-to-1. So Jonathan, you did an awesome job of annotation, right? The path isn't clear, but the momentum is good, and you're coming from a termination that reversed the market. So I think this is one of the ways. Oh, you're a woodworker? Right on. This is one of the ways, guys, that you begin to develop confidence. And Jonathan, you did it flawlessly here. Jonathan talked about his advantages and he talked about his disadvantages, which means that he's 100% in tune with the idea that he doesn't have a clear path, but he's stacking advantages. He's saying, but I've got this going for me, this going for me, this going for me. And then Jonathan's trading the NASDAQ. And Jonathan, I hope you got the lesson out of this. Guys, the NASDAQ is a different animal. The NASDAQ moves about 10 times faster than any other market. The volatility is ridiculous, and it's difficult. It's a difficult market to trade if you can't read your indicators fast. And one of the things with the NASDAQ is your entry chart is the same size as the large chart on crude oil or the ES. And if you fight the small triggers on the NASDAQ, you lose more often than you win. So Jonathan said, Mark, this is what I'm looking at. This is where I got in. And of course I had a minor aneurysm because Jonathan's risking over $1,200 trading directly into a termination condition. And Jonathan, if you say it out loud like that, there's going to be a part of you that says, whoa, wait a minute, that doesn't sound like a good idea. Right? So the lesson was on the NASDAQ for you NASDAQ traders. One second, Joe. Is it waiting for a close on the correct side of the triggers? And Jonathan, did you catch this lesson? Were you good with this? And you NASDAQ traders, waiting for the close on the correct side of the small triggers. Not only do you get a better entry price, but you've also got your risk already established. And you've got more room back to trouble. So this is kind of how the classroom works for you guys that are in here and brand new. You're going to tell me what you see. You're going to tell me what you did. And I'm going to say, hey, I think you could have really reduced your risk. You could have really maximized your profit potential with just a little focus on using that NASDAQ specific entry. So great job, Jonathan. And then, Joel, this is where I'm at. So I'll give you both of them. And just a heads up, every bit of data that I had, every workspace, every chart template, and I started fresh this morning, 100%. And then guys, Jonathan asked a great question. He's like, is that big red fib too far away to call this a hard top? And I like this because one of the things that you're going to do, and I'm just going to give you guys a warning right now that are brand new. One of the things that your brain's going to try to do is complicate things. Your brain's going to try to add scenarios. Your brain's going to try to add addendums to every rule, those 3 rules. A strong top or bottom is always 100% a termination condition that the triggers didn't break through that reversed the market. And hitting a divergence high line, all the triggers remain below, reverses the market. Guys, this is your strong top, and it's 5 points below the big fat fib. So make sure that you understand the verbiage. I'm a big fan of language being important. This, Jonathan, you had a strong top without hitting that big fat fib. The same way you had a strong bottom right here when this termination reversed the market. So the rules stay consistent, always, 100%, guys. If you learn the language, it becomes easier. If you learn the language of area inside a favorable large triggers, price reaches an area, where are my triggers? It really does set you up to be able to analyze and have the correct answer a little bit faster. And then Ron says, odds favorable, clear path. Let me make a little bit money down to trouble. Look at that exit. And then, wait a minute, there's one of those trend trades. Let me make money back to trouble again. Little double dipping. Not a bad way to start a Monday, Ron. And guys, we never see Ron take trend trades. That was terrifying. But that's where he started. Let me say that. This trade is not a trend trade, guys. This is a chart read, taking advantage of momentum in the clear path. Ron started with this trade so he could create expectations for that trade. And then Pete, we're going to go into Pete's a little in depth. Pete's got an awesome freaking trading plan, and he's very comfortable with it. Pete knows that this termination reversing the market is a good thing, right? Sets the tone. Does everybody see how the large chart is not a clear path, but rather it's that potential to break? The small triggers are through the area, but the large triggers have remained above, which means that these areas could break, but they're not broken yet. It's not a clear path because it takes the small and the large. Can you guys give me a why, especially new users? This is the most lost trade among new users. Termination conditions is the most broken rule. The 50-50 is the most lost trade. And when you go to the KISS plan that I gave you guys, it says divergence typically kills the 50-50 trade. So let me see if I can see both. So when it's only the potential, this divergence says, hey, it's not likely to work. A second divergence says, seriously, you probably don't want to be in this trade. A third divergence says, okay, we're going to go stop you out now. And a fourth divergence says we should probably go the other direction. And that's what he ends up doing. But this is one of those things where the indicators give you what you need to avoid losses when the advantage goes away. One divergence is pretty bad for a 50-50, guys. Two divergences is usually the kiss of death. And I won't touch a 50-50 with two divergences because remember that we're talking about advantages. And let's take this picture together. And I'm going to encourage you guys, take this picture and build one of these for your desktop. I'll give you the picture right now. Just print it out. And then once you print this out, take 3 pieces of paper, advantage size, and just set them on the desk in front of you. And if we look at Pete's trade, and I'm going to show you, that's it right there. And we talk about the momentums, or the trade. The momentum is present, and it's awesome. But we know that the clear path isn't there on the large chart. So we go to look for the entry area, and he's got an area inside of favorable large triggers, without a doubt. But then it starts coming into the idea that divergence is a loss of momentum. 2 divergences is 2 losses of momentum. 3 divergences is 3 loss of momentum. So when I start to see this loss of momentum, I have to start to believe, well, shoot, I'm losing that advantage as well. Do I want to take a trade with only an entry area? And there's a point in the beginning where the KISS plan, guys, that highest probability, that best chance of success plan for the 50-50, for that potential to break, says a couple things. The first thing is, from a strong top or bottom, is mandatory. From that termination condition is mandatory. And Jerry, I'm getting to your question here. I'm going around the horn. And because it's not a clear path, it says that both charts better have odds favorable momentum, so we don't sacrifice that momentum. And then it tells us no divergence on the 5-1. Why? Because the divergence is a loss of momentum, guys. This is the #1 killer of 50-50 trades, of potential to break trades, is not having the momentum that you need. If there is no divergence, you're just using that high probability trend trade entry, that entry at the area. But then it reminds you that divergence kills it more often than it doesn't. And then it tells you again in management, seriously, divergence sucks. Why are you doing this? This is designed to optimize your chances of success. So Jerry, in my world, if I'm looking for a 50-50 trade, a medium probability trade, and it's coming from a strong top or bottom, and that strong top or bottom, and let me show you Pete's picture, is right there. This right here, Jerry, is why I will ignore 1 divergence. 1. And look, 1 divergence took him right to the mid-band, and it pushed it down, right? I love it. The 1 doesn't scare me if I'm coming from a strong top or bottom. But it's not the best way to take this trade. And remember, the KISS plan is designed to optimize your chances of success. But the second I see a second divergence, especially if it's a higher divergence, you couldn't pay me to take that trade. You couldn't pay me to risk my money in that scenario. Does that make sense, Jerry? So if this is your initial plan, because you're following the KISS plan, because you want the best chance of success, your first amendment to this plan may say, if I have a strong top or bottom, I will allow 1 divergence, but 2 is a killer. But why is that not on the KISS plan, guys? Why is this written into the KISS plan rather than if it's a strong top or bottom? Because you're learning to read your indicators, and most of you guys have questions about what a strong top or bottom is. And if that's mandatory, then take some time, right? Learn to read your indicators, learn to understand your rules so you can follow your rules. And that's really one of the biggest challenges we see, especially folks that don't want to come to class and participate, is they create these half-truths. And they show me charts later in life. Oh, I had a clear path. Well, no, you didn't. It was only the potential to break. And that changes management. That changes everything. And they struggle to find success. So if you're brand new with me, guys, I want you to assume that everything I say is utter BS and that this is snake oil and it'll never work. But I want you to go through and learn how to follow these rules and back test it. Because if you do that, I will. Wayne, I do them in order, brother. So I gotta stop and do the lessons and all that good stuff. But it's always in order, and you're coming up, I promise. But if you ever have to split, like if you're ever like, oh man, I got stuff to do this morning, let me know. I will bump you to the front of the line, guys, because I want everybody to get their lessons. But Jerry's question revolved around that 50-50, so I wanted to make sure that I got it and got it answered. And you're getting close. We got 1 or 2 more in front of you. And then with everything down in a clear path, you take the momentum style trade. getting in on the correct side of things. 2 divergences, don't scare you with a clear path. I love that. Out at the line, guys. This is when you're comfortable with your rules. Pete knows that it's odds favorable and a clear path. And 2 divergences just don't worry him. He holds that momentum all the way down to the next area. That's experience, ladies and gentlemen. Gary, 50-50 with divergence. You take the trade and it goes to your target. Nicely done, Gary. Strong top, 50-50, 1 divergence. There's Exhibit A, guys. Gary's been around long enough to know that he'll take a shot from a strong top or bottom. Clear path momentum. Amen. You almost showed me your entry. Looks like you got short and then got out. Push back to the mid-band, small, large chart, trigger line, rules met. Sell, stay in until buy target met. Or second reversal bar. Awesome. So let me figure out where we're at here. 10:51, 11. Okay, so it's this tail. All right, so Wayne, here's one of the things that's going to happen. And I'm going to go through rules. And we're going to come back and we're going to talk about the language. I don't know what pushback RNM means. Help me with that one. So your reversal bar was somewhere over here. Rules not met. Okay, cool. Your large chart read is rock star, right? Guys, that's like the best look on the large chart. There's momentum. It's down. There's nothing in the way. Holy crap, this is great. And Wayne, what happens is here's your triggers. Whoop, there's a big black box over your triggers. Here's your triggers, and there's just no areas inside of them. You do have an area here. So this is where, and this is kind of going a little more in the direction. If I have no areas inside of triggers, but the large chart is perfect. So that's kind of my precursor. If I want to trade with large chart advantages, I can wait for a reversal bar in the direction of my trade. This establishes risk and keeps me from just jumping in and hoping. Does that make sense? So the one thing that didn't get done is rule number 3 didn't get met. You didn't have those areas inside of favorable large triggers. You did have areas beyond it. And if you wait for that reversal bar, then you know exactly where to put your stop. Your risk is established. You're trading with momentum. You're trading with the clear. And then you have a better shot of taking that trade. Does that make sense? And guys, this is what happens. The high probability trend trade is the best of the best. Man, it is all the warm fuzzy feelings you could ever hope for. The reality is, guys, is the market's not going to give you that best of the best more than 2 or 3 times. So we're learning to read our indicators. We're learning to gauge advantages. And guys, you're going to find more entries. But in the beginning, I keep you focused on the best. And then, Wayne, the one thing, and everybody in this room that I want you to see, if rule number 3 says I have to have an area inside of triggers, and you know rule number 3, well, then you know that there's a challenge, right? Then you know there's a challenge, and you know that if you're going to take the trade, you need a logical way of working around that challenge. You need something that establishes your risk, that puts you in the direction that you want to go. So it's an awesome, awesome look. Rule number 3 keeps you out of this one, but understanding rule number 3 keeps you focused on maybe waiting for a reversal bar to get into that trade. Great post. And then Pete, there it is, Wayne. Triggers rolled, fibs down, separated. Waiting for that reversal bar when it just isn't perfect. And by waiting for the reversal bar, he says it's going the direction I want it to go. The large chart says we're going that direction anyway. Let's giddy up. And where's 96? Good stuff, Pete. That was very timely, too. Andy. Strong bottom, clear path. No areas inside of large triggers. Had you been in this trade, 5 ticks outside might have been exactly to the tick. And then Andy, the flip side of that, the reversal bar off the area that's just beyond gets you into the trade and allows you to capitalize. So there it is again. Just because it's not perfect doesn't mean that it's not a trade. But for the brand new user, until you learn how to gauge all these things quickly, no trade is better trade. And that's one of the things in the beginning, guys. I'm all about blanket rules. I'm all about giving you guys a very basic set of rules designed to optimize your chances of success so that you can start to create your own plan. Jen, pivot stop out here. Yes, ma'am. Right into termination. Amen. Odds favorable. You waited for it to clear the pivot stop out. You get in once it does and capitalize on that momentum all the way down. This is the area inside of favorable large triggers, but because of pivot stop out on the large chart, you waited until price cleared the large and you chili dogged the hell out of it, Jen. Nicely done. Oh, right on, Andy. You just weren't in front of it. So, guys, when it's not perfect, Jen says, you know what? I'm going to wait for it to get south of everything that could ruin my day. And, Jen, that's pretty effortless. Nicely done. Ron, there's going to be a whole crew of people trading your trade. And then here's the exact same look, getting in on the momentum. And then when the momentum dies, it turns into a trend trade, and he takes it all the way down. Nothing wrong with that. So, Jen, he took your idea and traded to trouble, right? And when trouble didn't hesitate, he knows trend trades well enough to just catch it down. Pete, I like that. That's just next level chart reading. And then Wayne, odds favorable, everything down. Best entry is at the areas inside of favorable large triggers, right? And you kind of took Jen's entry where you got to the other side of the small and you still get paid. Just a different way to do it. Nice, Pete. 900 above the daily goal. 2,400 by 7 a.m. You were away from the screen? Well, then great job jumping in and recognizing it in the moment. Perfect. Nicely done, Wayne. And Wayne, you are a shining example of how quickly this can be learned. If you focus on momentum and the clear path first, you'll find an entry. Odds favorable, 50-50, area inside of large triggers. Down it goes. And then Jerry S., notice that it's a strong top. Strong top leading into the 50-50. I wanted to make sure that you saw that one. When will I get into the areas? When it's coming from here. And look at that momentum. I love it. And it's even better when all of you guys start showing the same trade, right? Who was that? Andy, that was you, right? Did you catch that? Trading in sim. I love that. Made enough money today. Great job. Don't give it back, right? Odds 50, divergence, not your money. I like it. I love the pictures where you guys say, man, my rules aren't met. That's just not my money. Tom, beautiful 50-50. Perfect window of opportunity. And Tom, the only thing is your highest level of resistance is the fib. And then your stop goes beyond the triggers. I mean, that's perfect, Tom. Great read. Entry at the bottom of the window of opportunity. Yep. First target, 67.60. Move stop to break even. Second target, a few fib ticks above the fib. Beautiful, man. Great job. Are they keeping you busy at work? Is that why we're missing you in here? All right, I just want to make sure, because a lot of times people get excited, right? And they have a good week or two. And I love it when you guys buy the software because you understand the potential and you know you have to learn it. I always want to encourage people, don't feel like you have to leave the room because you purchased software or because it's not your first week or you're not on demo. I want you guys in the room until this stuff is all second nature. So, and I don't think that's what you were doing, Tom, but just in case, I want to make sure that everybody knows this room never stops being your room, ever. Need to wake up earlier, you lazy lima bean. Right on. Waited for price to clear trouble. Jerry, I don't worry about this line. Or where at? Or this divergence. This line? It's a 50-50, right? That's all it is, Jerry. It's a 50-50. I don't worry about anything ever. Worry makes me move my stops and take the wrong entries. But what I do see without question is that this area has the potential to break because of all that momentum. So I just see if it's worth it to me to take it. And my rule said, hell yeah, take that trade. It's just a line. And guys, that's one of the things. And I'm glad that you said that, Jerry. Guys, these are just lines. That's all they are. None of them is more important than the other. So, Jerry, if it were a fib, I'd have the same approach. If it were a divergence low, if it were a 1-to-1, I'd have the exact same approach. I would look at my trigger line relationship and then make a decision on the trade. Good stuff. Let's see where we're at. Miss Adriana. Oh, you know what? I didn't finish with Ron's. I went totally sideways on that. Price clears trouble. That's Ron's rule. He writes it on his chart every time, even though he knows it like the back of his hand. Odds favorable momentum. Triggers are stacked and in direction. He gets in, he gets out. Base hit. So you knew, guys, you don't have to make $1,000 every trade. Learn how to get paid. Learn how to use the advantages and get paid and get out. Adriana, back on the NASDAQ. Let me see where your entry is. 667, 667. So we're right here with odds favorable and everything says up. And it pulls right back to the mid-band right inside of the triggers. And Adriana, you take probably the easiest trade you're going to take all day. I mean, that's everything, isn't it? Odds favorable, didn't reach the problem area yet, pulls right back to the top line inside of triggers, and off it goes. Beautiful trade, Adriana. It's nice to see you back in class. Mr. Flowers. Odds favorable momentum. Everything is screaming. Not quite a high probability trend trade. This is the one that kind of crosses the line. This is kind of like a mix, Paul. This is really just a momentum trade. And this isn't bad because it pulls right back to support inside of triggers. You know where your stop goes. The rules are met. The only challenge with getting in on the reversal bar is, Paul, do your rules say that divergence is a killer on a 50-50 trade? Then if you get in, and this is where, if that is a rule that you have to follow, you can't get in until you know whether or not divergence is true. And then you have to make a decision. Does that make sense? So if you're getting in on the reversal bar, you don't know if that's going to be true or not. But what you really did here, Paul, is this is a momentum trade that Nexgen teaches. And I want you to see this. And it doesn't give you time to react to divergence. When the large chart is screaming like this trade right here, where the small triggers break through and it snaps back to the fib and goes, this is a momentum trade. You are anticipating the break of the area because of the momentum, and you're using the fib as a little bounce point. It's a brilliant trade, Paul, and I just wanted to let you know that if divergence is a killer on the 50-50, then you had a little backup there with the momentum trade. But your large chart look is perfect. Just a little, I'm trying not to confuse you, and I hope that I'm not. It is the perfect momentum trade. And it did everything that you thought it would do. Absolutely. And it's large chart led the way. And Paul, I think this was the biggest thing, because your challenge is you were popping into those areas, and now you're trading from those areas. And the results kind of speak for themselves. A lot of the times, guys, we want to get in here into the areas instead of from the areas, and that's the key, Paul. So that's your big victory. Your biggest challenge is being happy with taking your money off the table. You just need to know if it's a quick 100 or more room to run. Termination conditions, Rob. That's it. Do you have room to the next line? That's the whole thing. And you have to know what kind of trade. So, Rob, your management's going to revolve 100% around advantages, right? And let me show you guys. Let's do something. I think we're almost there. Let me get through a couple pictures, and then we're going to address that. I know. So, Rob, do me a favor. Take a picture of your spreadsheet where you took 25 pictures of termination conditions so that you would never trade into them. And show that to me. Your SI is broke. I don't know what SI is. Your Snagit's broke? You know I find solutions, right? There you go. There's free capture software for you. Works almost exactly like Snagit. It's the free version of Snagit. Now you can take those pictures. But your Snagit hasn't been broken, right? And you've known that you've had problems with termination conditions for the last 3 months. Not trying to go all beat your butt down, but you keep telling me what your problem is. I keep telling you how to fix it, but then you refuse. So I don't know what else I can do. But there's a way to fix your problem, but it's on you. It's going to take a little bit of study, man. And I know study's no fun. Feels like work. Sure does pay dividends, though. Kurt, strong top. Yeah, it is. Clear path. You better believe it. Stop placed above the triggers. So what you run into here? Yeah, I don't know what that is unless you tried to upgrade to something else. It's a one-time payment typically. All right, so Kurt, one thing that we forgot to talk about. How are we doing on momentum here? Strong triggers or weak triggers? Not great. All right. And then not really great here either, right? So there's no momentum on the chart. Can we agree? So we're trading without that first advantage. Okay. You do have a clear path. There's no doubt in my mind. And then your mid-band's on the wrong side of those triggers too. Does that make sense? So let's do this again. Cool. And this is why I think it's so important for language, right? So what are the rules? There's momentum. There's clear path. And there's area inside of triggers. And then we're going to use that for the language. You didn't have momentum, and you didn't have an area inside of triggers. And guys, this is what we call avoidable losses. Kurt, you got a little confused over here where you still had momentum and it was dancing. And you thought, well, once I get below, let's go, right? And it's totally normal. I agree with the thought process. But you don't have momentum here. And you don't have momentum here. So what you were trying to take is a momentum style trade. Just have you heard me say in the room that very clever phrase, the JTFI? It relies on momentum. Just jump the fudge in. That's exactly what you did. Your entry is at the low tick. So you just jumped in. Man, I hope it goes. Right? When is it more likely to go? It's more likely to go with momentum. If you're just going to jump in. So while I don't disagree that there may have been an opportunity in here somewhere, if you're going to do that jump in, Kurt, you're going to have a better chance of success if you have momentum all the way. You were lacking momentum on the large chart, brother. That leads the way. And then your small chart, your large triggers, yeah, you had a little bit of momentum there. But this is the one that leads the way, right? And this is the one, this is your driving force. Have you heard me say that the large chart leads the way? That the large chart should be the reason that you look for an entry? Large chart had given up on you. Large chart said, Kurt, you know what? We're fizzling out. Anything can happen. And that's exactly what happened, was anything. It got you. Does that make sense? So when I was learning momentum trades, Kurt, and everybody in the room, and for those of you that don't know, John Novak, who wrote the software, he's my older brother. I bounce everything off of him. Everything that I do, he sees. Everything he does, I see. We go back and forth. We're a pretty good team. And I was learning these momentum trades, Kurt, and everyone else in the room. And I can't tell you how many times I heard, how can you take a momentum trade if there's not momentum on your charts, right? If you can't show me momentum on both charts, you don't have a momentum trade. And Kurt, I think I'm just really thick-skulled, but I was so excited about the idea of learning this new trade that I didn't really learn the rules for it as well as I could. And that's what really stuck with me. How can I have a momentum-based trade if I don't have momentum? And it kept me out of a lot of trades, and eventually that worked for me. So when you feel tempted to do this, you have to ask yourself about the momentum. And the fact that you didn't annotate about it lets me know that you knew that it was going away. And that's just a little thing. That's a defense mechanism. When you don't annotate the problems on the chart, it means that your admission keeps you out of the trade, and keeping you out of the trade fights the hope. Yeah. But they told you that they might take a little turn before they got there. And that's where momentum comes in. So, dude, I like the thought process. I really do. And I just think there's a really strong lesson there. Nicely done. And if you guys don't post them, how are you going to learn? Triggers rolled over. This is Paul. Price reached an area, mid-band. Not a clear path. Gap theory. Amen. When price reaches that midband and those large triggers don't follow, don't take that short, right, Mr. Flowers? Because it's likely, oh, you bet. Kurt, I'm telling you, man, you're going to learn every day for the rest of your life. The fact that you're in this room taking these lessons, you're going to get to where you want to be faster, and then the lessons are just going to be like bonus gravy stuff. And then, Paul, can I ask you, how many times in the past did you take that short hoping it would win? I took it a lot. Over and over and over. So, guys, make sure that you celebrate your victories. When these lessons start to get you into the right trades or keep you out of the wrong trades, make sure that you celebrate it, that you look at it, that you talk about it, that you understand that rules are designed to keep you on the right side of things. And that is such a great chart read and a very avoidable loser that you avoided. Great job. Nice. Dropped it into your favorite looks. All right, Jonathan, we'll get you before you head out. 50-50 trade. Looks like you took a decent entry, made some money on it, hit the termination, everything rolls. Pulls right back to the lowest point. You get in, make some money. You let it clear. We're 50-50 again. You get in just below the mid band and make some money. Nicely done, Jonathan. Trading momentum, trading the potential to break, trading from areas, not into areas. Jonathan, there is so much good about these charts. Nicely done, dude. Sounds good. Pinieski. Man, you just threaded the needle, Paul. Guys, check this out. This is pretty awesome. Here's Mr. Flowers' gap theory. Everything rolls. Everything's pointed up. Look at his triggers. The small and large are above resistance, and he hasn't reached the next area. This is a clear path. And because he trades the pullback, dude, Paul, that is nice. That's understanding your rules, ladies and gentlemen. What a great trade. Sniper shot for sure. What's up, C-Dub? Odds favorable, clear path. You get in on the way up. Didn't trust it. Made 4 ticks. Made a couple more. Then the perfect entry. Made some more. You didn't believe in 3 divergence, but now you're sold. I love that. C-Dub, that's awesome. Guys, one of the greatest things you can do as a student is assume that I'm full of crap. And I know that sounds weird. One of the greatest things that you can do is assume that what I tell you isn't true and then go and prove to yourself that it is. Because then it's your lesson, not my lesson. So C-Dub, that's pretty cool. Believing in 3 divergences. What happened here? You got a little scattered here. Gotta have those reasons to exit, guys. Gotta have those reasons to enter. Gotta have those reasons to exit. All right. We made it through all the pictures. Nice work. What's the large chart telling us? Large chart's telling us I don't have momentum, but I do have a clear path. And my areas are on the wrong side of triggers after 3 divergences. Paul hasn't posted today. Paul? I haven't seen Paul in the room. Just got to have that reason to exit, right, C-Dub? And when there's money on the line, you're more likely to change your views. But guys, this is such a good example. And Kurt, I think this almost goes back to what we talked about. Oh no, that was Paul turned around, the other Paul. What he did is, after the gap theory that you pointed out, he went long when the momentum reversed and he had a clear path. Give me 1 second, or you can just scroll up about 10 inches and you'll see Pineski. Or I'll bring it up in just a second. So guys, no momentum, but there is a clear path. You found it? Okay. Is everybody good with that? So this is where we're at. No momentum, but we do have a clear path. So we have to look for the entry area. Here's my triggers. And my areas are on the wrong side. Do you see how rule number 3 isn't met as well? This is why we always go back to the basics, guys. This is why we always go back to that very core. And then, Wayne, if you were saying, yeah, but it may still go down, let me wait for a reversal bar off of resistance, I'm willing to take the trade, you never got it. And now you're so far on the wrong side of everything that it's a cool reset. And look at that. Once you get to the wrong side of the triggers, guys, you don't know where that market is likely to stop. Does that make sense, everybody? That is a beautiful example of how knowing your rules keeps you out of a loser. I'm all for winners, guys. I love winners. But the difference between the winningest traders and the ones that are struggling aren't the winners. It's the avoided losers. It's the trades that you don't take when the rules aren't met. So I'm going to take a few minutes, guys. I'm going to go stretch my legs again and refill my water. When I come back, I want to try something. We'll watch the live market. Paul Flowers, there's your gap theory again. Price reaches the area, large triggers a full bar away. We will come to the large market. We'll take a look at it. We'll see what's going on. But I want to talk about kind of my thought process as I talk to myself about advantages, and maybe it'll help you guys a little bit. So I'll be back in about 3 or 4 minutes. Post them if you got them. I'll leave you with crude oil right at a divergence high with weak triggers. All right, Paul, let's go through it. You don't understand this trade. Break it down. Looks like he entered the trade at the mid-band, maybe after reversal bar. And it looks like the first target had already closed. You don't know. So let's try this, Paul. So let's just start and go through it. And this is a great way because, can you hear me, guys? Am I in here? Okay. Have a good one, Ron. So let's start here. It's a termination that reverses the market, right, Paul? So this is a strong bottom. Can we agree? That creates advantages. The smalls are beginning to break above the large. So this maybe isn't the strongest trigger look ever, like here, but this is the beginning of odds favorable momentum. It's in that acceleration phase. Does that make sense? All I'm doing is I'm going through the 3 rules. Triggers cleared the fib. Looks like it. So clear path because it didn't reach the next fib. Still with me? Does everything make sense so far? Cool. No divergence, strong triggers, and his midband is just at the base and just a little bit outside. He chose to enter at the midband. How come? Because the momentum wasn't perfect. And I know Paul well enough to, and I can hear him saying it, even though I don't know what his voice sounds like. Because this isn't 100% perfect, I'm going to take the lowest risk trade that I can. I'm going to take the lowest risk entry. So I'm going to look for that lowest point of support right there at the triggers, and this becomes my entry. And what that does is it lets him get paid quickly just in case that less than perfect look doesn't pan out. And then once he gets paid, I guarantee he was at break even. He wasn't willing to lose. Does that make sense, Paul? And it's a little messy after the fact with all of this stuff on it. But what it really is, it's a strong bottom. It's the beginning of momentum. He chose the entry that gave him the lowest amount of risk because it wasn't quite odds favorable. And he got paid quickly because that's the goal. And he said, there's a fib off in the distance. If this thing runs, what a great place. But if divergence comes from that fib, he'll be out of it. Does that help a little bit? Cool. And you have to remember that all of that, you're welcome, it was that bar. That's what he was looking at when he chose to take that trade. That's a great question. I like it when you guys ask questions about other people's trades. All right. Got in again with 3 divergences because Mark doesn't know what he's talking about. I love it, C-Dub. Then took quick profits before price hit the divergence line because you've seen it reverse many times. First entries on 1 divergence. Second divergence got you out. Red bar got you out, and then you entered anyway because I don't know what I'm talking about, but you managed to get paid on it. C-Dub, this is my favorite annotation ever. That may be my favorite chart ever. All right, guys, I'm going to open up a Word document real quick. And we're just going to type and have some fun until somebody posts a picture or asks a question. When I'm looking at my charts for a trade, or more specifically, for rules to be met, the first thing I ask is momentum. Do I have it? Why am I asking that? Oh, awesome. Thanks for being here, Wayne. if I have momentum, I know the market is likely to continue in the direction of the trend. And guys, this is my thought process, and this is what happens when you begin to learn the rules and you have an association with that rule. So when I see momentum, the first thing I think is, man, this market's likely to continue in the direction of the trend. And then the flip side is, if I don't have it, I know anything can happen. And it's not my best look for a trade. Does that make sense, guys? This is all I'm doing. When I look at a chart, I literally look at the chart and I go, do I have momentum? And then my brain doesn't go yes or no. My brain talks about what that advantage means to me. What it means to me if it's present, but even more importantly, what it means to me if it's gone, right? So Kurt, on your trade, when you didn't have momentum, your brain should automatically go to, it's not necessarily likely to continue in the direction of the trend. Anything could happen up or down. And this little, guys, this is like almost out loud for me. My dog can day trade at this point. My wife knows the rules because she's heard me from the other room, because I talk it through. And then the same thing is when I go to terminations, right? And it's the same thing. None. I know there is no line that could create a bounce. Present. Market may bounce. And it's really that simple, right? I go through it. It's like, oh, I don't have a clear path. Shit, it may bounce. And if it may bounce, well, there goes my advantage. What a bummer. Guys, give me 30 seconds. I got to let the hound dog out. Sorry, she's ringing the bell. 1 second. Sorry about that, guys. So this is literally my thought process as I go into a trade. When I talk about what does my chart say, right? I have to go through this order of operations. So let's go to a live chart. Do I have momentum? Well, my smalls are starting to break above, and this is the same look that Paul had, and I can say to myself, this is an odds favorable momentum. Everything's in the right direction, but there's no separation. Maybe I have a trade, and then I have to say to myself, well, I'm above the divergence high and I haven't reached the other one. So while I don't have the best momentum, I do actually have a clear path, and then I have to go to my small chart for the tiebreaker. If this market pulls back to that mid band right inside of the triggers, am I willing to try to take a trade without that great advantage of momentum? So Spice, what you just asked me is, hey Mart, if my rules aren't met, am I better off doing nothing? Is that a pretty good translation? If my rules aren't met, am I just better off doing nothing? That's a decision that you're going to have to make. For the brand new user, Spice, it is my opinion, and my opinion is worth exactly what you paid for it, which is nothing. It is my opinion that if my rules aren't met and my advantages aren't present, that I prefer to do nothing. Because if my rules aren't met and my advantages aren't present, well, I'm just kind of hoping stuff works out, right? And then Spice, let's go to, you said, how do I measure momentum? I measure it with the triggers and the separation between the two, right? Same way I teach it every morning. Separation, good. Scissors open, good. Momentum strong. Advantage, great. Love it. And then Spice, we grow with the software. And going from strong triggers to weak triggers, Of course, there's a transition period, right? There has to be, where the small triggers come back through. So when you can speak to yourself in terms of advantages, when you can gauge these different things and you can say in the moment, hey, my small triggers are returning, but my path is still clear, I might look for a low risk entry to continue with that trend, even though I know the momentum isn't perfect. And you have to say again, I don't have the momentum, but you know what? I've got a clear path and I have a rock solid entry. I'm willing to take a shot with this look. So it all goes back to advantages, Spice. So momentum alone it's only one piece of the puzzle. But when it's there, the market is most likely to push. And when it's gone, this is where you start to see those fluctuations. This is where you start to see that market dance. And the same thing is true is once I start to see divergences, right? Once my smalls are inside of the large, suddenly this doesn't look that appealing to me. Two divergences, large triggers are down. There's an area inside, but gosh, my momentum isn't pushing that market where it's likely to continue in the direction of the trend. And sure enough, without momentum, there it goes. Kind of cool, right? So who looked at that one and said, I don't have the best momentum, I'm going to choose not to take this trade? Even my small chart doesn't have favorable large triggers. Did anyone avoid this one? Or did some of you say, I'll hope the clear path carries me? And that's kind of where you go, guys. And you talk to yourself about these advantages and disadvantages, and you make decisions based on that ideal. Steve Diego. Odds favorable, potential to break from a strong top. One divergence right to the mid band, get paid. Two divergences right to the divergence low, get paid. Three divergences, you know what, to hell with it. I'm going to take it anyway. And it worked out. So there's two things that I'm going to say about this one, Steve. The first one is that the large chart said it was more likely to go down than up, right? Your small chart said we could have a pretty ugly retracement, and you made a decision. You chose to trade into a termination condition. And this time it worked out for you. Oh, I see it. Came from a coffee fill up. Looked quickly at the chart. Missed third divergence. Means no trade. Did a fear of missing out trade. So when did you recognize that you were trading into three divergences? Has anyone other than me ever taken the wrong trade but just held into it anyway, hoping it works? Instead heading close for a little loss? Yeah, I've done that. Only you can decide what that is. But here's the cool thing. Notice how it never got above the top of the trigger line? That's an advantage. The fact that it got back below the small triggers, that's an advantage, right? Getting paid quick on the less than perfect trade, that's pretty awesome. And then recognizing trouble, and you know what, I'll take it off there. Let me get the hell out of this trade. I realize it's not the right trade, but it's given me the potential to make a couple bucks. Let me see if I can make that couple bucks. Hopefully you tightened up your stops quick. And guys, taking the wrong trade isn't always the end of the world, right? And Steve, you recognized that there was problems. You got paid quick on it. I think that with the trade, with the look, with the entry, I think you handled this one about as well as anyone could expect you to handle it. Great job. Great job. Just because my rules aren't met don't mean your rules aren't met. And who knows, maybe one day these will be in your rules. They won't ever be in mine, but one day they might be in yours. My brother will gauge the large chart versus three divergences all day long. He doesn't have a problem with it. I'm more black and white. I'm real artsy fartsy, and the more I let myself daydream, the harder it is for me to be consistent. So I try to stay very, very focused. But I think you definitely had more advantages than disadvantages, which is why that one probably worked out the way it did. Great entries create manageable trades. So let me praise the rule breaking, because I think you did it perfectly. It's always coming. Here's a 50-50. The challenge with this 50-50 is that's my lowest point of resistance, and that's my highest point of resistance. And that's a pretty big window, isn't it? So is it going to go from 19 or is it going to go from 31? What do you guys think? That's a $120 window. Only you can decide where your entry will be. Would I consider that a strong top? Oh, because the fib stopped printing? Yeah, so that was right at your fib update. 100% Morgan. That's that 8 a.m. fib update. And all it did is it kind of recalculated and it dropped it a little bit. I would say to myself, yeah, that's a good look. Because price reached that Fibonacci resistance. All the triggers remain below it. And then it recalculated. And it recalculated in the heat of the moment. So, yeah, the same reason, and I'm sure you guys have done this. It's happened to me before, where you enter what appears to be the perfect trade, and then the fib update happens, and you're like, son of a gun, I'm trading right into a termination condition. But yeah, that very much turned into it for you, didn't it, Morgan? And then Paul Flowers, there's the trade you took earlier today, just the other direction. With all that momentum, that little snap back to the fib, and down it goes. There's your momentum trade, guys. Paul, that is an exact replica of the one that you took this morning, just going down. And then if that one fails, it just has the potential to turn into a trend trade. Do I have momentum traders in here? Have you ever thought about that? When your momentum trade fails, it usually turns into a trend trade. Understanding that pattern enough to incorporate stop placement. We saw Pete do it beautifully this morning. But it is the same one, right, Paul? It is. So that's what's kind of cool, is all it is. So this is the same one, Paul. This is it right here. Momentum coming down. It's a little snap back to the fib when the small triggers break. It's just a momentum trade. And what you're saying is, I hope that this momentum breaks this area. But because I know that it's not high probability or anything like that, I'm not keeping my stop way the heck up there if it gets me. We'll see if it puts us into the trade. All right, we're in. That's it. I might say a reversal bar on the wrong side of the triggers takes me out. And if it doesn't, hell, let's see if we get to the next line. Guys, this is it. I'm looking at 5 ticks of risk on this trade. At the potential for that area to break. So if it's just a momentum trade, does it make sense to put a $200 profit target? Or should I just try to get paid quickly, take a base hit on momentum? And that was the easiest $200 you'll ever make, guys. That's your next trade when you can read it. I'll be right back. Give me 1 second. All right, so Jay, there was one of your live trades. Talked through it, right? Odds favorable momentum, smalls break through, sell the snapback to the fib. It's just a momentum trade. Don't hold for a home run, guys. Get paid. I love that trade. And then once momentum fails, tail into momentum in a clear path. I've got one area inside of triggers. Should we see if it finishes the move? There it is. Stop where the market shouldn't go, but I'm trading without momentum. Do you guys see it? I don't have momentum, which means I'm just kind of hoping, and I'm not putting a lot of risk on a trade. Yep, and I just gave back most of what I made because it wasn't the perfect look. Let it be the perfect look. You had no 68.20 fib, so had entry at midband, never reached for entry. 68.20, that's all the way up here. Oh, right there for that potential momentum there. Right on. What about this one, Steve? But see why momentum fails, guys. It fails all the time. And then once that momentum is gone, this becomes less likely to work. I have to say to myself, I'm losing momentum. So even with the clear path, it's not the best of the best. Fun stuff. And you will get to the point to where you talk this stuff through your head. This is what I see. This is what it means to me. So if you waited for the reversal bar, look at that. I got high ticked. Jerk faces. Is that my best look? Oh, Jen, I hate it when he does that to me. What Jen's saying, and man, this is, my brother would do this to me all the time. I would send him a picture where maybe I tried to go short right here. And he would say, hey, Mark, is that your best look for a short? And I would have to say no. And you don't always get that in the heat of the moment, guys, because you will convince yourself that it's the correct trade even if it's not. And that's why always focusing back to those rules. They get you to the tick. Yeah, Andy, they do sometimes. They definitely do. But you know the flip side is, Andy, is how rad is it when your exit is to the tick, and that looks pretty cool. This one we had momentum, both charts. This one we still had odds favorable on the large, and the large leads the way. And then this one was an area inside of triggers, but I'd sacrificed momentum, which means that it could push up a little higher. And that's exactly what it did. It pushed up a little higher. So do you guys remember the talk earlier? If momentum isn't there, right? If it's not the best momentum, and I've got a pretty good looking area, I could wait for a confirmation bar because I'm not sure if it's going to push bigger, or I could leave a bigger stop, but that's kind of ridiculous because look what happens when we start sacrificing momentum. Anything can happen. Then there's got to be a part of your brain that says, whoa, maybe this isn't the best trend trade to be in. Maybe I should force confirmation. Maybe I should, think about waiting for it to be better. And that's the stuff that you do. Smoking that hopium, Jen. It's not legal in Texas. We're in the Bible Belt here. Can't do it. And look at that thing go. And once we're on the wrong side of the triggers, God, who knows where it's going to go to? I don't. I never do. And you're right, Andy. Mark Douglas was brilliant. And Jen, that would once again be John Novak's asking me, hey, Mark, how many times are you going to get your ass kicked breaking your rules before you stop breaking your rules? And guys, when you stop expecting to win every trade, you're going to start winning most of your trades. When you stop caring about the result and you start caring about the execution, that's where That's where that Zen trading comes in that Andy's talking about. When you know that your pattern wins more than it loses, and you commit to that pattern. And I'm going to tell you right now, guys, it's a huge freaking struggle to work through your brain, to convince your brain that you don't have to be in the market all the time to be rich. You're never going to know what's going to happen. And your rules make it okay to not know what's going to happen because the patterns have been proven. Weakness, you take the trade, right, on the wrong side. Where do you get gap theory out of this? Morgan, help me with this. Where did you get gap theory? Gap theory is a large chart phenomenon. It means that you reached an area and the large triggers are a full bar away. It's not a small chart thing. You've got areas beyond the favorable large triggers, which means that you don't know where it's going to stop. So I love that you got it on the way down in quick profits. You took it beautifully. And probably, right, weakening triggers. I'm sorry, Steve, did I miss a comment? Learning from taking those that the last trade was not inside of favorable large triggers. Are you talking about on my chart, Steve? My chart absolutely had an area inside of triggers. Morgan's didn't. Morgan was on the wrong side of triggers. Is that what you were talking about? Were you talking about my chart? That fib was very much inside. The one thing I had sacrificed was momentum. And it pushed a little bit beyond the triggers because I didn't have the best momentum. And I think that's one of the reasons that we talk about these advantages is when I have momentum, the market's likely to push in the direction. And once that momentum goes away, once that momentum decreases, things can change. It can retrace further. So let me go back to, maybe this will help. When we talk about entries, and we talk about that high probability trend trade entry, the whole reason, I think this might be a good lesson. Oh, look at that. We stumbled on a lesson, guys. The whole reason that my entry is here is because of odds favorable momentum. Because I don't expect the small crowd to be able to push that far. So what if odds favorable momentum is weak triggers? Does it stand to reason that the small crowd may be able to push further down, may be able to push beyond? See how the association goes back to the advantage and what it means to me. If I see odds favorable, I'm in at the top. If I see weakness, well, maybe they're going to push a little lower. I have to be prepared for that. And if it's really weak, maybe they're going to even be able to push a little bit beyond. Let me wait for some confirmation. Did that make sense, Steve? We were inside on mine. And then there's your gap theory, right back to the large triggers. What do you guys want to talk about? Odds favorable, potential to break. If I get a pullback, that's my highest point of support. If it reaches that line, I have to cancel my trade because now I'm into a termination condition. How quick was that? Wow. So what are my options now? Either it breaks the area and I get one of those 50-50 trades, or this area decides to stop the market and they fall out of bed. I don't know what's going to happen. Steve, did I hit your comment? Did I answer it? Did my comment give you what you needed on your comment? But I agree with you. Areas not inside of favorable large triggers. I don't want the trade either. Oh my gosh. Dude, I'm so sorry. I'm so sorry. I didn't scroll down. So Steve, you said yes like 8 times and I was stuck 6 feet up. My bad, guys. I had to scroll down. You guys are probably like, oh my gosh, Mark's having a stroke. I'm not. Jen, you have 2 trades today. The first, trading less and watching is so important. Amen. All right, Jonathan, we saw these. Momentum trade fails, right? It's a good look, Jonathan, but these fail. Pulls all the way up, starts back down, you let it clear, and you're able to capitalize, and you're out with the loss of momentum. Really nicely done. I think this is a beautiful shot at it. It just didn't work. I don't know that I would give it that many bars, though. 2 bars up, for me, done. That's it. And then here you let it clear. Nicely done, Jonathan. You just kicked ass on the ESJ. Nice. Andy, 2 quickies. NASDAQ, odds favorable. It breaks, pulls back to support, runs up. Breaks, pulls back. I'm not sure what that was. Runs up, 50-50. Nice job, Andy. Kurt. 50-50 look on the divergence high. And all right, so Kurt, let's go through language. Termination that reverses the market. 100% strong bottom. Odds favorable momentum. Yep. Potential to break. Yep. Didn't work. Yep. That's it though, man. That's the trade, Kurt. Didn't work. Because we were hoping to break the fibs and we were hoping to break the divergence high. And it just didn't work. You would have been betting on the potential to break and it didn't pan out. It's a great read though. It's a great read. I would have been willing to lose that one with you, Kurt. I would have taken that one with you and taken the hickey. Weak bottom, odds favorable, clear path. You're in at the area. And then when it gets to the correct side of the triggers, you add on. Gino, I like the patience on your add-on. You get paid at trouble, and then you tighten up. Gino, it's like I don't even know you anymore. Dude, this is awesome. Because that entry makes sense. And that add-on makes sense. And that look makes sense. Nice job. Yeah, Spice. Give me 1 second. I'll talk about market replay. You had an order at the fib and it just didn't get you, Andy? Jerk faces. Belt. Weak bottom. Odds favorable. Breaks through the fib. Enter at the fib. Exit at the next fib. I love it. You could live in this class way beyond you quitting your dirty job. Hang out. I like this class. Belt is awesome. Everything says up. You let it clear trouble and you get out at trouble. Just a heads up, Belt, and everybody in the room. If your weak bottom is 25 minutes and 6 broken areas away, this really doesn't have much bearing on this anymore. But what you did do, Belt, is everything set up so you went up on the correct side of trouble and you got out at that big red fib, and really no reason to even give back 2 points. Oh man, and Andy, you're absolutely right. One of the best things is that everybody here is doing the same thing. Hey, Kenna, nice to see you. Jay, what are my thoughts? ES is going up? Yes. Absolutely. But I've got weak triggers and the area wasn't broken. So my rules say either let the area break before you try to take a shot, which it did, it just broke. So I've got momentum. No, I don't have momentum, but I do have a clear path. And my lines are getting to the wrong side of the triggers. So 66% of my advantages are gone. I don't know that I'm comfortable with it. And then Spice. So for market replay, this is what I like to do. And then we'll go to the next one. You've been traveling for work? You bet, Jay. And Jay, it's like Sunday school, man. The answer is always going to go back to Jesus. And for me, the answer always goes back to are my rules met? And why I stress so heavily to really insist on letting rules be met. The Sunday school answer is always, what do my rules say? All right, so Spice, are you with me? And this is for everybody. This whole step-by-step learning path actually includes the market replay. And after class, before the next day, do that market replay, right? So set up the week. But the idea, guys, is to go back and fix mistakes. So Spice, one of the best, I don't give trading advice, but I will give replay advice. One of the things that I see happen with people that go back and market replay is they try to replay a market that they remember. So Spice, if you're going into the market on replay and you're saying, oh, I remember that this one ran for 1,000 points, even though none of the rules were met, and you jump in and make that 1,000 points, your brain believes that you are the greatest trader ever. And you're more likely to break your rules when you're trading live. So what I try to encourage people to do is when you go back, fix mistakes, right? If you made a mistake, whether it's management entry, something like that, fix it. If you skipped a trade that fit the rules, take that trade. But what I think is the best usage of it is to have your KISS plan in front of you. Have your trading plan in front of you, whatever that may be. And when you think your rules are met, when you're inclined to hit buy or sell or activate a limit order, hit pause and really police yourself. Can't. Mine's very selective, Spice. Hit pause and see if your rules are actually met. And I think this is the best way. Not is your opinion validated, but are your rules actually met? And what you'll end up doing is you'll not just only take the right trades, but then you'll start to create this real basis for what's possible when you follow the right trades. And I think that's what hooks people in. My market replayers, whose only concern is following the rules rather than making the money, these are the people that get the most out of it. Because what it does, everybody in this room, is it shows you what you can do when you follow a plan. And that develops trust. And once you have trust, it's hard to not take the right trades, if that makes sense. So, Spice, that's my thoughts on it. Make sure that you're trading rules, and your CRS should clear up the other problem. I'm going to use that. That's going to be one of my new favorites. CRS is right up there with GTS. Anytime one of my kids is like, hey, Dad, what's a blah, blah, blah? I'm like, dude, GTS. They're like, what does that mean? I'm like, Google that shit. Happens every time. All right. Momentum, who was this? Kennan? Tail into momentum. No areas inside of favorable large triggers. You're hoping that fib holds, right? Does that make sense, Kennan? Rule number 3 is not met. You have room to get to the next area, but you don't have any areas inside of favorable large triggers here. Give me a Y if that makes sense, Kennan. Cool. Which means that thank God that held for you, because it could have been anywhere beyond it. And honestly, if I'm not mistaken, is that the ES? I don't remember which one it was. Here's a great example. This is a great example. Okay, but it's the same one. See how the lines are on the wrong side? Guys, look where the market went. And this is one of the lessons that I want you to get. And guys, I blanket you. I'm like your grandma trying to keep you safe from wolves. One, you don't know where it's going to stop or if it's going to stop. So you guys are welcome to keep taking these trades. But I'm telling you, you're going to have a day where you get the ever-loving crap kicked out of you 20 times in a row because you didn't work on rule number 3. Don't ask me how I know. No momentum. Triggers not providing odds favorable momentum. Waiting. Beautiful. And there's that dance, right? Once the areas start getting to the wrong side, once those triggers aren't favorable, once the momentum isn't there, and they eventually made it to that divergence low. They eventually made it. But how do you manage that? How do you take that trade? Absolutely. Jen, great patience. All right. You see the momentum, Kennan? Small's below the large, larger wide, everything says down, we're going. And honestly, your triggers are below. Do you see how high probability trend trade rules are met here? So far, so good. Work with me, Ken, and give me a Y. Large chart rules met, right? Rule number 3 says to sell a pullback at an area inside of triggers. So here's my triggers. Are there any areas inside of the triggers, Kenan? There's not, right? I expect price to come into these triggers. That's it. That's one of the things that I can almost guarantee is that price pulls back to these large triggers. It did it there. It's probably going to do it up here. It's done it all day. It's done it for the last 50 years. But what happens is once I'm on the wrong side of those triggers, once price pulls through and gets to the other side of the triggers, beyond the triggers, I call it the wrong side, I don't have any idea where that market's going to stop. So anytime you hear me say price got to the wrong side of the triggers, that fib was on the wrong side of the triggers, this fib was on the wrong side of the triggers, and the midband was as well. And that turns out that it was the midband that stopped it. But if you got in at the fib, Kenan, you probably got stopped out on the way to the midband. Does that make sense? That's a pretty good example of it. You just don't know. It still may continue up, but hell, which one's it going to come from? And this is where the idea of using a reversal bar, if the large chart says giddy up to the upside, guys, but the small chart isn't perfect, you can use that little idea of confirmation to get you into that trade. Does that make sense? I know you said okay. And very often okay means Mark, shut up. I don't really get it and I don't want to talk about it anymore. I just want to make sure that's not the case. So Exhibit A, C-dub, wrong side of the triggers. And then what's kind of cool is your recovery, C-Dub. Right on. And I say that not because I think you guys are trying to pull one over on me, but for me, when I was getting lectured by my parents and I didn't give a say okay to shut them up. And I'm not saying that's what you're doing, but I do find in this classroom that okay means I don't really understand it, but I feel like I'm monopolizing time. But yes typically is good. No, that's okay. No problem. But I worry about that. I worry that you guys aren't getting the lessons that you need, and I always want to make sure that you are. I'm a worrier. So C-Dub, area on the wrong side of triggers. Got you pretty quick, didn't it? Broke rule number 3, cost you money. That's what I want you to associate here. Broke rule number 3, cost me money. Are you with me, C-Dub? Yep. And then when everything's set up, you kind of take that momentum look with the anticipation of a break. And it doesn't really fit any rules I have. So this is more of a jump in with momentum. And you get paid. Should I be worried running into stops on 5-1? What does that mean? Should you get paid at a line? So C-Dub, what kind of trade is this? Sorry, you may be a slow typer too, and that's okay. No, tell me, what kind of trade is it? Is it a trend trade that you took? If it is, then trend trade rules for exit, right? Was it a momentum-based trade that you took? Yes. I feel like you're relying on the momentum. Otherwise, why the hell would you just jump into the market? So let's just pretend that you knew that you were getting in because of momentum and not just jumping in afraid that it was going to go without you. So if momentum is a reason for entry, does it stand to reason, C-Dub, that a loss of momentum may be a good exit? Does that make sense? If momentum's why I got in, so you're still up, still up, still up, no close on the wrong side of anything, right? It's just nothing but up bars. One of the things, C-Dub, that you can use and that I've seen people do is that if I'm in on momentum, well, a close on the wrong side is going to be that loss of momentum. And I have chased markets with a stop on that reversal bar marker for 30 points. If momentum is the only reason I'm getting in here, a close on the wrong side of the small triggers is my exit condition. And until that happens, I just stay in. Does that make sense? And this goes back to that crazy thing that I say every day. If you're going to get into a trade, you got to know why you're going to get out. If you're going to take a trade, you have to know why you're going to get out. So if I'm in a momentum trade, close on the other side of the triggers. That's enough to get me out. That's a loss of momentum. Does that make sense, C-Dub? So be able to define your trade. And if it's just a holy shit, I jumped in because I hope it doesn't go without me trade, I would say I might just get paid quick because I have no idea why I'm doing what I'm doing. So how can I manage it effectively? I better protect myself. And I think you did a good job with it. And I think that if you're upset about 7 points, it's a great trade, dude. It really is. It's an awesome trade. But the next step is you got to know how to manage your trades, guys. You got to know why you're going to exit. And it takes all the emotion out. It's because you don't have a plan, C-Dub. And you know what? That's probably on me. I've never told anybody in this room that they should have a reason for entry and reason for exit. So today on this 9th day of September, guys, this is day 1. Build a plan for entry and for exit. Know both sides of it. It's all my fault. That, third world hunger, pretty much everything, C-Dub. Divergence printed, and you lost. And that was it, right? Andy? And Paul Flowers, this goes back to your trade. Andy, if divergence on a 50-50 will keep you out, you have to wait to see if divergence is true. You can't get in on the second bar. It just doesn't make sense. Because divergence isn't true until the third bar. Does that... So if you have a rule that says divergence keeps me out of this trade, you can't enter before you know if divergence is true or not. Oh, that almost makes sense. And then once it printed, you could have lost 2 ticks, but then hope kicked in, right? Hope is such a rough way. Such a rough way to trade. We've all done it. I won't pretend for a second that I haven't done that. Do entry areas move as your price moves? Give me 1 second. That's okay, Andy, because you recognized it, right? Here's a 50-50. Belt takes the momentum trade, and then when momentum goes away, belt, awesome exit, and then it pulls all the way back to the midband, and you know that it's not perfect, and divergence is already printed, and you said, I'm not going to jack around, give me my money. Nicely done. Spice, the only time my entry will move is if my only area is a midband, because as price pulls down, the midband pulls up. So I've gotta get it. I know, Belt. I told you guys, you show me 5 charts, I'll know exactly what you're thinking every trade you get into. And it'll be scary how well I know what you're thinking every trade that you get into. Does that make sense, Spice? The only time I'll move an entry is because the midband will come up as price comes down. So sometimes, like I'll have it right here, 2 ticks above, and then I have to kind of step it up a little bit as it happens. Cool. That's the only time. Great questions, guys. Keep them coming. Trying the momentum trade without momentum, and it didn't work. Jonathan, tell me if that makes sense. Trying the momentum trade without momentum, and it didn't work. That's a tough one right here. Just too close to the fib and not enough strength. And then once you get away from the fib, you take the momentum trade, and it just kind of carries. And you got stopped out of that one too on the wrong side, and then you get back in on the right side, and off it goes. I like that you let it clear everything, and then you went to carry on with the trade. And I think one of the things trading is, guys, is it's learning your rules, right? And then committing to those rules that you know win more than they lose. And that's how we get paid. And then it's a constant state of making mistakes. Because every time you make a mistake, you begin to recognize a pattern, guys. Sometimes the patterns keep you out of trades, and sometimes the patterns work their way into your trade plan. But the easier it is to recognize the advantages, the more you're going to see. And then if you're not sure what you're looking at, all you have to do is drop it in the room. I love to talk. I love to talk. It makes me happy. Morgan, you've got one? Guys don't post all day. And then you gotta... Why would you figure that, Jonathan? So let me read this out loud. Jonathan said, I also figured price would go to the fib. Jonathan, your safest course is I don't have any freaking idea what the market's going to do, so let me trade with advantages. The market could drop from the middle of nowhere for absolutely no reason at all. Let me trade with advantages. You'll never know what it's going to do. You can know where it's likely to go. Gary, pulled back to the mid-band with momentum. How do you figure, Gary? 3 divergences, wrong side of everything. It just pulled back to the mid-band. That is your small chart. You let it clear, and then it becomes much easier. I'm not sure what this chart's doing for you. 3 divergences says pump the brakes, get to the other side, and it becomes pretty easy. Morgan, I thought you had one, brother. Yeah, Jonathan, don't ever figure that it will. Just assume that you have to follow your plan. Thought this would go to the fib, Exhibit A. Great bottom, odds favorable, only the potential to break. 1 entry, 2 entries, 3 entries. Momentum fails, turns into a trend trade. And then you take it back up and you get out pretty much break even. Barely, right? Spice, I'm not sure where I said enter on a reversal bar for 30 points. That had to be picture specific. Take care, Kenan. Thanks for being here, man. So Gino, you had $180 per contract and you just kept adding on the way down. And then you take the perfect entry and it works out nicely. And then you exit all of them and then you re-enter and we're not sure what happened. I like the look though, Gino. I don't know that I like... This is just really understanding that momentum trades that fail with a good-looking large chart turn into trend trades. So, good chart read. I struggle to sit through that much risk personally. Everything says up. Pull back to the area, right it triggers, and you get paid. Odds favorable, clear path. So, Morgan... Rules 1 and 2 met without question on the large chart, yes? So who cares about 1 divergence? That's the little loss of momentum that you need to get you back to the entry. Beautiful trade. Nicely done. And then Spice, do you know... I don't know, Gino. I'm not looking at it. And we don't think anything, Gino. Right? Are your rules met? Morgan, great trade. 1 divergence doesn't scare me on a high probability. What do you see? I see odds favorable, potential to break, multiple divergences. 1 divergence on a 50-50, maybe from a strong bottom. 2 divergences on a 50-50, no thank you. How's that, Gino? 1 divergence on a 50-50, maybe doesn't freak me out too much, opportunity to go up. 2 divergences, I don't care for it. Now my smalls are against me. I've already had 2 divergences. I've got odds favorable, momentum down. Something's got to change before I feel like going up again. Does that make sense? First was an opportunity to get in and manage out. Second one was financial suicide on a 50-50 with two divergences. Jerry S., there's your lesson again one more time before you call it a day. For me, no. Just one loss of momentum, two losses of momentum. That's it. That one was lower than that one, but that's a pivot stop out. That one was higher, but that's a pivot stop out, right? So, no, just keep it simple, Belt. Right to trouble. Nice one, Pete. No, I pick my brain all the time. And then Pete had that big fib right there. That's it. That's the trade, guys. Nicely done. Spice, do you know what picture we were talking about? Because when I talk about entering on reversal bars, I'm talking about just letting it confirm one direction. There's not an association of what you'll win. There's no guarantee that you will win. I don't know what a yellow reversal bar is. Where's a yellow reversal bar? Help me out. So, Spice, you're seeing something in your head that I can't see right now. Can you show me a picture? Or are you talking about it coming back to the reversal bar marker? In what scenario? On what chart? What do the triggers say? Is it trading into an area? Do you see how there's so many things left out of your statement? I can't even begin. Because every one of these bars didn't go back to the reversal bar marker. Right? Every one of these bars didn't go back to the reversal bar marker. So I would disagree that 90% of the time it goes back. None of these bars made it to the reversal bar marker. So there's got to be more to it. Does that make sense? All right, guys, I have to take this call. I'm going to put up today's video. Thank you, everyone, for being here. I'll be back in 5 minutes, though, but this is my wife, so I'm going to pick up the phone, and I will see you guys tomorrow. You guys take care. Be good.